Taiwan, the U.S. urges calm from Beijing as Nancy Pelosi is expected to visit the island today. Caution abounds while Asia stocks and U.S. futures sell off as market angst rises, plus BP buyback. The supermajor plans to return $3.5 billion to shareholders after reporting a beat on profit. So first thing is first, let's take a look at these futures. Now, of course, the focus is firmly on foreign policy and geopolitics as Nancy Pelosi, the highest ranking official from the U.S. in 25 years, to visit the island. That means there could be a rift between her and President Biden. But more than that, what markets are worried about, and it's being priced into these European stock futures, is really the fact that there's the escalating U.S.-China tensions. Unclear whether this would be on, trading, if she does show up in Taiwan, or whether we could see even something worse, for example, happening in the Straits. Now, this is a picture overall for some of the commodities. I know BP, definitely not an outlier. It's following super majors and giving back more money to shareholders, increasing dividends, just because there's so much profit that they're making because of Russia's war in Ukraine. In terms of the impact this has on some of the other oil majors, Shell, look out for that. BP, I think, probably will rise at the open, but we'll see whether there's a bit of profit taking. So I'm looking at commodities. On the back of it, look, gold, 1,774, not huge, but we are also seeing a move towards some of the havens. So I guess these risks are being supported, for example, for havens like treasuries. There are also more and more worries out there in the economy. It'll be interesting to see with Mark Cudmore what he thinks of the non-farm payrolls and what's starting to be priced in, but there's risks that the global economic slowdown is taking possibly a turn for the worse. We look at foreign exchange, British pound 122.19. Now let's look cross at some of the other things we're watching out for. Now, the CAC 40, the IBEX, all down between 0.2 and 0.3%. The U.S. 10-year yield, probably one of the most important and significant moves in today's trading session, 2.5481. And again, if you look at some of the S&P futures, down some 0.4%, so mirroring some of the losses that we're seeing here in Europe as equities open. Now, soon we'll also be speaking with Luke Ellis, the chief executive of Man Group. Interesting to get his take on inflation and what that does for some of their client inflows. Now, let's get over to our Bloomberg first, MLive managing editor. He's Mark Cudmore. Mark, you're looking at past U.S. recessions. Good morning.
Yes, good morning, Francine. Obviously, today we're completely focused about the Pelosi landing in Taiwan, or the potential landing there. And her scheduled landing, or supposedly, is around the same time we get the JOLTS data tonight, the job openings in the U.S. And that should be a data print which should emphasize the U.S. is nowhere close to being in a recession right now. It doesn't mean one won't come next year, but we're not in one right now. If we ignore it tonight because of Pelosi, well, on Friday when we get the non-farm payrolls data, we'll certainly understand that it will undermine the very deep kind of growth concerns around the U.S. recession, and it might be a catalyst for higher yields. So this is a chart of non-farm payrolls going back to the origination of the data back in 1939. So a lot of data we have here. We have over 80 years of data, and this shows that the 5-month moving average of the jobs prints and overlaid with recessions. And you can see that every single recession has coincided with a downturn in jobs. We have net lost jobs over a 5-month period. And we've never once had a recession without a negative jobs print. We have got a couple of false positives, i.e. we've got a downturn in jobs without recessions, but never the other way around. Right now, we have the strongest jobs market, as according to non-farm payrolls, than we've had in almost 40 years, basically since the period since the pandemic, it is nowhere close to showing jobs. Friday's forecast from the consensus forecast from economists is another 250k jobs being added, nowhere close to being negative. And in the last 5 recessions, we actually got a negative print by the second month, apart from the great financial crisis, where we managed to eke out an 11k gain in the second month before we got 21 months of job losses after that. So basically, jobs market in the US is going no chance of recession. US yields over the next year are completely mispriced. Friday might be the catalyst for them to start trading higher again.
Mark, another great chart. Thank you so much. Our managing editor for MLive there, Mark Cudmore. And to everyone, please go and check out our wonderful MLive blog. You just type LIV GO on the Bloomberg terminal. Now, our top story today, House Speaker Nancy Pelosi set to land in Taiwan this afternoon, likely making her the highest-ranking U.S. politician to visit the island in 25 years. Now, let's bring in Bloomberg's Cindy Wang in Taipei. Cindy, first of all, what more do we know about the trip, and how is China likely to react?
Yes, U.S. House Speaker Nancy Pelosi is expected to arrive in Taiwan in just a few hours from now. She will land around 10:20 p.m. here in Taipei, and then she is scheduled to meet with Taiwanese President Tsai Ing-wen first thing tomorrow morning before heading to legislature to meet with lawmakers and the legislature speakers, and then she'll probably leave Taiwan around noon for South Korea. So Nancy Pelosi's visit is really a landmark one of great significance because she is the first one in 25 years to visit a democratically ruled island with such position. The trip is also very sensitive due to her stature because she is second in terms of presidential line of succession. So that's why we've seen China has warned the U.S. of grave consequences should Pelosi visit Taiwan. And the U.S. President Biden also made public comments that military thing is not a great idea for Pelosi to visit Taiwan right now. So we've seen several possible scenarios of China's reaction. It's widely expected that China would definitely react very strongly to Pelosi's trip to Taiwan. But the question is what? The several possible scenarios outlined by John Kirby of National Security Council yesterday include missile tests in the Taiwan Strait, or more violations in Taiwan's ADIZ, or the Air Defense Identification Zone, or PLA could send more warplanes to the Strait median line, and possibly we could also see more naval exercise too. So these are all possible scenarios that China may react to the Pelosi's potential visit to Taiwan.
All right, Cindy, thank you so much. I know you have a very, very busy day ahead of you, so good luck with that. Cindy Wang in Taipei. Now let's get into the key market drivers with Hugh Gimber. He's global market strategist at JP Morgan Asset Management. Hugh, I stand corrected. You're now a foreign policy expert, because I don't know how you trade this. First of all, it's difficult to understand what the intention of Pelosi is going to Taiwan, but what is the market afraid of?
So I think the market is afraid of this being the sort of catalyst that you tend to see in the run-up to a recession, where we know that the economy is weakening, but there tends to be one moment or one issue that tips things over. Now, for me, I think the answer is you do not trade this, because as the previous speakers just described, there are a large range of potential outcomes. We have very little clarity on the rationale. We have little clarity on how China might respond. And therefore, I think you have to take a step back and just say, this is not something that you can try and react to on a daily basis. There are a couple of things that we can draw from this, though, particularly, I think, where in markets you're seeing areas which are not fully priced for the slowdown. So the reaction in the yen, for example, over the past day or two, I think is notable, because it's one of the standout areas to me that suggests that is not a level which is properly reflected.
Are you trying to say that basically we need to try and understand whether China is a friend or a foe, and that this would also change your view on a global recession?
So we know that there is significant competition between the US and China. That's been clear for several years. What we've not had over the past couple of years is the confrontation, which really marked that slowdown that we had happening at the back end of 2018 or 2019. So if this visit is the catalyst for that shift from competition to confrontation, then I think that does have economic ramifications. If this turns out in a few days' time just to be sort of more headline noise that is last week's story, then it doesn't change the picture.
Okay, for the U.S., are we going to, is the Fed able to engineer a soft landing? And, you know, in your notes, what I found particularly interesting is, like, how do you match up this, you know, slumping consumer confidence, but pretty solid retail spending?
Yeah, so this is all about really, it's whether you look at the economy as a nominal issue or as a real issue. because I think all of these indicators are screaming that the nominal economy is still in decent shape today. We're seeing that through wages, for example. I expect us to get that backed up in the payrolls print on Friday, but it's the real areas of the economy that are really starting to hurt, and that was true of earnings season as well. So can the Fed engineer a soft landing? Yes, I think they can. Signs like those sort of prices easing in the manufacturing numbers that we've had more recently is a positive signal there, but the runway is narrowing. They face a very tight balance, and that explains, in my view, why this shift now to data dependency and just saying, look, we're not sure where we're going, we're going to have to react on a meeting-by-meeting basis is the right way to go.
So how many kind of hikes are you expecting? And again, it's a very fine balance, because once the inflation expectations are de-anchored, that's it, game over, right?
So I think they will hike by 50 basis points in September. I think you then get another 25 in November. I think December is up for grabs at the moment as to whether that's a pause or whether that's another 25 basis points. But importantly for markets, I think there's a growing sense now that whilst the Fed clearly still has work to do, the worst of that hawkishness that was accompanying big moves earlier in the year is probably behind us, and therefore it's a slower path of tightening going forward.
So very quickly, what does that mean for equities? Kind of steady as they go for the moment, or range bound, or are you expecting a big correction?
So for me, I think there are two catalysts you need to turn more positive on the equity market at the moment. One is you need to see some of the earnings downgrades, which I think are broadly anticipated, starting to feed through. And two is I think you need at least a couple of months of headline inflation coming down, because I do think that the Fed is acknowledging at the margin that there's this trade-off between growth and inflation. But whilst inflation's heading in the wrong direction, they're just not going to be able to act on that. So I think that's still a key catalyst before you can say, okay, the Fed is comfortable, and you can then start to look to re-engage with the equity market.
Great, Hugh, thank you so much. Hugh Gimberther, a global market strategist at JP Morgan Asset Management. Thank you, getting us started for a pretty heavy day, news flow-wise. Coming up, we'll also be speaking with Luke Ellis. He's Chief Executive Officer of Man Group, the world's largest publicly listed hedge fund, after it misses first-half estimates. We'll talk about outflows, inflows in certain parts of the markets. We'll also talk about inflation. That's coming up shortly, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Fin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Welcome back to the Open, everyone. We are 12 minutes into the European trading day. You can see a bit of pressure that's actually accelerating for the European stock 600, down 0.7%. This, of course, is as we follow tensions between China, Taiwan, and the U.S. continuing. We are expecting, for the moment, Nancy Pelosi to arrive in Taiwan, the highest-ranking U.S. official to go to the island in 25 years. Chinese leaders saying, please don't do that. Now, onto corporate news, and Man Group's first-half net inflows have missed estimates. The world's largest publicly listed hedge fund says it sees assets falling for the first time in 2 years. Now, net management fees grew by 12% year-on-year, but also came in below forecast. Its shares have fallen sharply after the results. Joining us now is Man Group's Chief Executive Officer, Luke Ellis. Luke, thank you for joining us. There's actually quite a lot of good stuff as well, especially when you look at the alternatives. But we need to start with the share price, down some 7.2%. What are investors looking at today?
I think CEOs should never complain about what the market does with their share price. And given we make our money out of the fact markets are inefficient, I'm not going to get bothered. I mean, in the statement, I made what sounds a cautious comment about what's going on in markets, because I think markets are, clearly markets have been very volatile in the first half. Clients don't know what's going to happen in the second half, and institutional clients are trying to work out what to do. Anybody who thinks they can predict, you have to predict what's going to happen with inflation, what's going to happen with the Fed, to then get to what happens to markets, to then get to what clients may do in the second half.
But what do you think? So the underlying issues that what clients could, are you worried about inflows because clients will get the market chaos and say, actually, I'm not sure this is the right time to go in?
No. So look, we had good inflows in the first half. Yeah. In what we do, we outperformed by about 2.7% in flow terms, right? So we had inflows over the first half. What you saw coming into, sort of started about in mid-May, that a number of clients started to recognize that they were going to have margin calls on the hedging that they'd done. Imagine you're a euro-based investor, you've got 50% of your assets outside, probably in dollars, and if you've hedged that back, your margin call is going to be 5–10% of the overall plan. They had an urgent need to realize cash. Clients are sitting there trying to think, okay, we've had this big volatility. What does it mean for the future? We see it's very clear you're going to get lots of demand for liquid alternatives. So the inflow side of the equation looks very strong through the second half of the year. But what are clients going to do about their overall portfolio? I think anybody who would say they know is guessing, basically. And I just said, look, we think clients are trying to work out what to do. It will depend.
What do you think they'll do?
So I think personally that, I think the big picture is we've got inflation, it's got into wages. I think that leads to years, not weeks, of economic volatility. It doesn't mean rates are going to go up to N, but in the end, the only way you get rid of inflation once it's into wages is to cause a recession that causes unemployment. The question is, will central banks do it this time or next time or next time? That creates economic volatility. For liquid alternatives, that's both very good for generating performance fees and also for flows looking forward, because if you've got a volatile world, sitting just long concentrated equities is not the right answer.
So you're not expecting, is it even possible at this point for the Fed to engineer a soft landing?
It's possible that fairies exist, but it's pretty unlikely.
Is there a type of client that is attracted to hedge funds because of the market chaos?
I mean, yes, look, we saw very good inflows into our alternatives in the first half of the year, and I'm very confident that will keep happening. And sort of every client is attracted to it, right? I mean, in the end, in our alternative products, we made very good returns in the first half of the year. In all of AHL's flagships, they're up, more than 10%. That in a market chaos is pretty remarkable, right? The sort of, they shouldn't get into individual funds, but they make money in the times of difficulty. Hedge funds have delivered in the first half of the year, and good hedge funds have delivered really well. that is clearly attractive for the clients who think that the turmoil in markets will carry on.
Yeah, how long do you think the market turmoil will carry on? I mean, you were talking about a matter of years.
Yeah,
right?
Personally, yes. I think it's more likely that it's a matter of years than a matter of weeks. So that doesn't mean that we will go down in a straight line over that period, not at all. And one of the things when you look through these inflation-driven periods in history, remember, one of the things is Mr. Market is made up of, on average, a 40-year-old, and they've never seen inflation. And you have to go back to the 70s, you have to go back to earlier periods to get real inflation and see what happened. And it's possible that central banks really have it in them to do the things it would take to get rid of inflation now. The trouble is, it takes a significant recession, and I don't see central banks really being driven to cause that. If they don't, then inflation it'll get down to 3.5%, 4% next year.
But you're talking about Mr. Market, but it seems Mr. or Mrs. Central Bank also hasn't seen this coming, right? Inflation. Are we reaching the end of monetary policy, of what it can achieve? And is this actually the new normal for trading in markets and for hedge funds?
Monetary policy has never been able to get rid of market or of economic cycles. That's just never been a thing, right? And they did a lot to dampen, but every time over the last 20 years, they used up more and more of their tools to dampen things down. Because central banks, maybe if they'd acted very quickly and aggressively when the inflation started, when it was transitory because it was supply shock driven, maybe if they'd acted very quickly then, they might have got rid of inflation, but they didn't. It's now into the system, it's into wages, and once it's into wages, I'm afraid history tells you there's only one way to get rid of it.
How worried are you about euro levels, given the proximity to Russia and we saw parity?
Look, I think the European economy is in a very difficult position, right? We have basically double-digit inflation and give or take nothing in real growth in Europe. That's a pretty difficult place for a central bank. They have rates at zero. I mean, they're stuck with very difficult choices, and what's going on in Ukraine is horrible. But if you look at it from a rational set of decisions for Putin, it is entirely rational that unless Europe backs down, he's going to turn off the gas pipeline when it really matters. What he's doing at the moment is making sure we can't get stores of gas built up. And if he turns the gas pipeline off in November, the German economy is in a real mess.
Look, I mean, given all of this environment, so taking a step back, is there anything that you'd want to buy? Is it a good environment to buy another manager?
I don't know if what you said about the share price is true. Well, I'm pleased to say we'll do more of our buyback because it's a great opportunity. The bit, sorry, to go back to the results, our earnings were up 28%. Earnings per share in the first half of the year. I don't see anybody else in the asset management industry who's got results like that. We generated very strong performance fees in the first half, and I'm confident we can keep doing it.
That was a good non-answer. Luke, thank you so much. Such a pleasure to have you in the studio. Next time, come back when you're less busy, maybe not on earnings. I could talk to you for like hours. That was Luke Ellis there, the Chief Executive Officer of Man Group. Now, coming up, split or twist. HSBC's largest single investors is still plotting to split up the lender. We'll have plenty more on that story a little bit later in the program. This is Bloomberg.
Earnings season is here.
At this point, anything in positive territory for Europe feels like a reach.
And it's recession obsession. Bloomberg breaks the numbers first with exclusive expert analysis.
We've accrued higher than last year, reflecting the strong performance.
It's not about announcements, it's about execution, and I'm highly confident that we will deliver.
Bloomberg Television and Radio, the fastest numbers and analysis you trust.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Welcome back to the Open, everyone. 24 minutes into the European trading day, and you can see European stocks down some 0.7%. So the concern, of course, it's tensions between the U.S. and China. We're still expecting Nancy Pelosi to arrive in Taiwan in about 5-6 hours. So that's 3 p.m. London time. Stocks dropping on the back of those possible tensions. That means that there's demand for havens such as treasuries. Now let's also check on some of the stocks on the move at the Open. We have BP, Maersk, and Siemens Energy. So let's start with BP. Gaining some 4.5%. BP, of course, saying after that pretty incredible profit surge that they're hiking its dividends and accelerating share buybacks to the fastest pace yet. Now, this in general is not a lonely story. It's really a lot of the oil and gas industry boosting returns to shareholders as the cash rolls in, even while the energy crisis threatens the global economy. Maersk, another story on the upside, gaining some 1%. They've raised profit forecast again on this exceptional market. Congestion, I imagine, on trade routes is what has boosted some of the freight rates. And finally, Siemens Energy. Now, this is actually a stock that's on the downside, down almost 2.3%, almost 3%. And this is after Siemens Gamesa, that unit, had cut its sales forecast. So watch out for that. Demand in focus in general for some of the things that Gamesa does. Coming up, BP, as we were saying, up 4.4% after it raised its dividend, boosting share buybacks as well. More on the company's earnings. We'll look at BP, but we'll put it into context, see actually who has the most cash and what it means for the transition. If you look at BP, it's very clear that they're following the footsteps of most of its peers. BP today saying that it will repurchase $3.5 billion of shares over the next 3 months. Overall, stocks dropping. U.S. equity futures are also falling amid this escalating U.S.-China tension over Taiwan. Also, these deepening worries about a global economic downturn driving investors into the safety, for example, of government bonds. This is Bloomberg.
companies need to think about how they normalize Blackness and they normalize the Black aesthetic and what it really means to be inclusive. And that means to recognize and appreciate and respect and celebrate all aspects of culture and different cultures. And so it's critically important that we recognize that this is an issue, just as my sisters have said, and make sure that we recognize how that issue shows up in the workplace and how we can be advocates and allies in action to ensure that no person, no Black person in this country feels marginalized or disrespected or diminished in any way because of their hair or their race.
So the challenge is not everyone understands that race-based hair discrimination is a reality. And so we find ourselves constantly educating people, including lawmakers, to ensure that they understand that hair discrimination is racial discrimination. And so we are working collaboratively, the four of us championing this work together, along with the Crown Coalition, to ensure that race-based hair discrimination is outlawed nationwide.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Tensions over Taiwan. The U.S. urges calm from Beijing as Nancy Pelosi is expected to visit the island today. Caution abounds. Stocks and U.S. futures sell off as market angst rises. Plus, BP buyback, while the supermajor plans to return $3.5 billion to shareholders after reporting a beat on profit. Now, this is what the indices or equities are doing right now. A bit of pressure. You can see the European stocks, 600 down 0.7%. The FTSE actually not losing as much because, of course, BP is such a big company in part of the index, and it's gaining some 4%. So because of that, the FTSE is not as bad as some of the rest. You can see the DAX down 0.7%. Now, it's unclear exactly what a possible response from China is if Nancy Pelosi shows up in Taiwan. It could be a short-lived event. It could be a longer-term event. Certainly, markets are in jitters because of that, and that risk is supporting some of the haven demands, such as treasuries. Energy on the way up, gaining some 0.8%. Utilities and telecom in the green, but really flat. And then we're seeing quite a lot of pressure on financial services, technology, and retail. The other story, as every day, is concern on the global economy. Now, BP has raised its dividend and boosted share buybacks after its profit rose to the highest since 2008. Now, the company said it will repurchase $3.5 billion of shares over the next 3 months, adding to the $3.8 billion it already bought back in the first half. Well, joining us now is Bloomberg's James Heron. James, great to have you. BP earnings, so much ahead of consensus. What drove the beat?
Well, it appears that the oil traders had a really good quarter. Again, they've had several exceptional quarters since 2010. It seems to be becoming a bit of a habit, actually. But what happened in the past quarter is that the profit margins on refining some fuels like gasoline, diesel, were exceptionally high because of a shortage of refining capacity in Europe and the US. There were these huge price dislocations, and a company with a big trading arm like BP is really well placed to take advantage of this, and clearly they did so.
So, James, BP increased buybacks and dividends. Is it offering investors better returns than its peers, actually?
There's certainly a bigger increase than its peers have at this latest round of results. Most companies increased buybacks, but a lot of the increases were more modest, at least in proportion. And BP obviously did both buybacks and a dividend increase. And the dividend increase was ahead of what investors had been expecting. It was 10% rather than 4%. So, yeah, it's doing well. I mean, BP is still a reduced company somewhat because obviously since the invasion of Ukraine, it's exiting its stake in Rosneft, which was a huge part of its production and a major investment for it. It's still unclear whether it's possible for them to get any money for that or not. So, it's growing faster, but from a lower base than some of its peers.
So, James, is BP also using the influx of cash to boost investment? And frankly, what does it mean for the green transition?
Well, so far they're sticking to their plans for capital expenditure, which was a pretty tight plan to begin with. So there's no sign that they're really going on a big spending splurge. The company went to great pains to talk about how much it's investing in the UK and produced a very detailed document with all its plans. And I think that reflects partly the fact that, the political issue of high energy prices. We've already had a windfall tax here in the UK. Bills are set to jump a lot in September and again in the new year. So I think BP is aware of the political backdrop to this, and they talk a lot about all the efforts they're making to boost energy supplies.
James, as always, thank you so much. James Heron, then, of course, one of our star editors and reporters in the commodities team. Now, this is the picture right now for equities, definitely under pressure on concerns about China. China talking tough, saying Taiwan faces disastrous consequences of U.S. action. Now, they are part of the daily briefing, so we're listening to all of the Chinese policymakers. This is a pretty concerning message from China, vowing some of these resolute measures if Nancy Pelosi shows up in Taiwan. Hua's comments, strong, absolutely relentless in criticizing the U.S. and Taiwan, arguing that international law and history is on Chinese side. Now, it's very interesting that she rejects some of the precedents, for example, of Gingrich visits to Taiwan as being in any way, shape, or form a justification for Nancy Pelosi's visit. So we'll continue watching that briefing live, and we'll bring you any more news from that. Now, let's also stay on the energy story. And oil steadied after closing at the lowest level in more than 5 months as traders count down to Wednesday's OPEC Plus meeting on supply. Meanwhile, Russian natural gas supplies to Europe via Nord Stream were around 18% of the pipeline's capacity this morning, slightly below the level for most of Monday. Well, joining us now is Emma Richards, Senior Oil and Gas Analyst at Fitch Solutions. Emma, thank you for joining us. What happens to oil majors from now?
The major companies?
Yes.
Yeah, well, obviously they're in a fantastic position given where, oil prices are going. I mean, we've seen the results from BP, which were just incredible. So I think really from their perspective, they're just going to keep providing that wave as long as they can. But certainly the price outlook is starting to look a little bit shakier than it was earlier on in the year. The massive distortions we saw immediately after the invasion of Ukraine are starting to settle down a little bit. Fundamentally, yes, the market still looks incredibly tight, and supply side drivers, I'd say, are still fairly bullish. But what we're seeing more and more is that demand side concerns are sort of creeping more and more into the picture, and that's driving some of the declines in prices, and we'll probably see more of that later on in the year.
Emma, give me a sense of what you're expecting from OPEC. Is there anything that they can do to regain control?
To be honest, we're not expecting to see all that much in the September meeting. I mean, they're in a really difficult position because obviously Russia is a part of that group and has a big voting voice there. And the relations between Russia and those key GCC producers are really mutually important. So I think OPEC plus action will still be quite constrained. There are producers that could significantly ramp up their production, Saudi Arabia, the UAE, to some extent Kuwait and Iraq. But outside of that, there's really not a lot of slack in the group to do anything anyway. And I think producers like Saudi Arabia, they've really resisted pressure on them throughout the year to bring more barrels back to market to try and loosen the balance a little bit. So now that prices are starting to turn, now that the outlook looks a little bit more fragile, I think it would be odd for them to shift strategy at this point.
So, Emma, give me a sense of, what happens to the actual price of oil. It doesn't seem like it's range-bound anymore. Are all bets off, depending on what happens with Ukraine, but also, the possible recession we're seeing?
Yeah, absolutely. I mean, prices have been volatile throughout the year, obviously, and liquidity in the market is still very, very low. So the market is really vulnerable to these extreme movements in price. And I think you're absolutely right. It could go anywhere. I mean, the drivers on the supply side are sort of pulling the market in one direction, and the drivers on the demand side are pulling it in another. So I think it really depends on how, economic data goes from here on out, how far we see, recession risks rise in places like the EU, and the extent to which that really takes hold of the oil market narrative.
Emma, can you give us a sense of, I mean, is there any way that we can, avoid a full gas embargo?
Our core view would still be that we won't see Russia halt supplies to the EU entirely, but I think we can expect to see them continuing to restrain gas flows to Europe. Obviously, it's in their interest to try and curb those supplies to prevent the EU from adequately building up their stocks ahead of winter, and then that leaves them really vulnerable to gas rationing, higher energy prices, broader cost of living squeeze, and as I said, potential full-blown recession. And I think that's really what Moscow is probably angling for at this stage. So, as I said, I'd expect that they want to keep flows going to some extent, a little bit of plausible deniability on their part, and keep just uncertainty in the market as well. But I wouldn't rule out a complete halt to trade, given how far relations are deteriorating.
All right, Emma, thanks so much. Emma Richards, our senior oil and gas analyst at Fitch Solutions. Now, coming up, split or twist, HSBC's largest single investor is plotting to split up the lender. More on that story next. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Welcome back to the Open, everyone. We're 42 minutes into European trading day. First of all, European stocks still on the downside. Two things. They worry, of course, about a slowdown in economic growth. They also worry about these heightening tensions between China and the U.S. Speaking of which, there is a very important briefing. I think it's a daily briefing, but today, of course, it's of a different importance. And this is from the, the highest-ranking spokesperson for the Chinese Foreign Ministry. She is Hua Xinyong. She's been talking for about 20 minutes or so. She has reiterated that China will take some resolute measures if Nancy Pelosi goes to Taiwan, if that trip goes ahead. Unclear what that means or what kind of actions. But again, the force of the language is something that traders are really taking notice. She also reiterated that China is opposed to this visit from Nancy Pelosi. She says Taiwan faces disastrous consequences of this U.S. action, and she calls it reckless and provocative. Again, She's made some references, and we're trying to follow it as we bring you all the other live updates. She's made some references on the, for example, proliferation of nuclear submarine technology. China not very happy about this. Unclear, again, what exactly they're intimating. I urge everyone to go into our live blog. We have a wonderful, wonderful live blog that only focuses on this briefing of China as Pelosi is likely to visit Taiwan later today. So it has everything in there. We're continuing watching, of course, that briefing, and we have two reporters on the ground as well. Now, spooked by years of scandals, losses, and an ongoing leadership shakeup, Credit Suisse has handed out more than $300 million in a month to retain top bankers. But last week, the chairman, Axel Lehmann, discussed how the bank plans to keep talent.
Why should I stay at Credit Suisse if I'm an employee holding stock that's 60% lower than when Gottstein arrived? Why should I stay here?
Because they look forward. There's huge potential.
Will you have any problem fulfilling the strategic mandates that you have from institutional clients? Is it going to be tough to keep people here at the bank?
Sure, you need to manage that. You need to speak to people. But, you know, our people are excited about the way forward.
Well, let's bring in Bloomberg's EMEA finance team leader. He is Tom Metcalf. Tom, great to have you. I mean, first of all, this is huge, right? 300 million is a lot, but does it keep you there? I mean, do bankers just stay for the money, or do they want, like, you know, an institution that's doing well?
Well, clearly, the fact that these payments are being made shows that, you know, Credit Suisse is trying to stem a lot of defections. We've been reporting about that over the past few months and even years, actually, as these scandals have developed. But, you know, this figure, 300 million, this is not for the year. This is in the month of, I think, July, basically. So really extraordinary. And in comparison, yeah, it's about as much as they did for the whole of 2021. So I think that really shows that Credit Suisse is kind of, at least for certain employees, really struggling to retain them and thus pulling out all the stops. And some of the details of these payments they're offering is quite extraordinary.
I know, and I love the fact that your team are trying to, you know, trying to get to the juicy stories behind numbers. I mean, this is people, you know, negotiating bonuses and the like. What does it tell us about Credit Suisse as a whole? And I don't know whether we look at Deutsche Bank. I mean, I always try and make the parallel, but can we make the parallel? Like, if you're an institution that just goes from scandal to loss to scandal, like, how, you know, how do you get back on your feet?
Yeah, it's like a momentum thing, right? Like, and I thought it was a great questions there to the chairman, right? The way the investment bank, which, you know, they're trying to sort of restructure, will succeed is they have the best talent there, and it's just really hard to keep that talent. If, you know, let's say you are a top performer in Credit Suisse, you are probably, you know, getting sort of headhunted, and why would you stay at a bank that doesn't seem to be able to right the ship when you could go to, say, a franchise like a Deutsche Bank, which seems to be rolling on all steam, or, you know, one of the big US firms. So, you know, that's why Credit Suisse are perhaps getting out the checkbook for certain bankers, and I think it's largely like their deal makers, those rainmakers, because they have said they're sort of pivoting towards an advisory-led bank. So I suspect that's their focus, is can we keep those bankers who, by being in position, bring us those key clients, bring in that revenue, and that's why they say it's worth paying something like, you know, guarantee someone 10 million over 2 years to keep them because they can bring in that much revenue.
Tom, thank you so much, as always. Bloomberg's EMEA finance team leader, Tom Metcalf. Now, on to another big bank. In just a few hours, executives at Hsbc will try something they haven't in 3 years, meeting face-to-face with their uneasy shareholders in Hong Kong. Now, the bank caught in a crossfire between the U.S. and China, but also retail traders and executives, backers of its global model, and its largest shareholder. Well, here to discuss these tensions is Charlie Wells from Bloomberg News. Charlie, good morning. So why is there so much riding on today's meeting in Hong Kong?
Francine, there is a lot riding on this, as you say, and it's essentially an existential question for the model that HSBC has followed for years. It wants billed itself as the world's local bank. Now, some of the largest investors in that bank say they don't like that model so much anymore. Ping An Insurance Group has been calling for months for HSBC to spin off its Asia unit, and an interesting twist here is that retail investors in HSBC, who are incredibly important for the bank, Hong Kong-based retail investors, make up about a third of the shareholders of this bank. They also want to see that spinoff. Now, there are a number of reasons why they want this to happen. It has to do with local control and also profitability.
So splitting up HSBC, who's right here? The retail traders who back the split, or the bank executives who presumably want to keep HSBC together?
That's a heated question. So retail investors would say that they want more local control. So they were furious in 2020 when dividend payments from HSBC were effectively paused. And this was a de facto order by the Bank of England. They were very angry about that. They also say that HSBC's Asia unit is simply more profitable. It brings in about 65% 60% of profits for HSBC. Now, executives this week have been making the case against them. They have basically been saying this would be an incredibly risky move. It would take a lot of time. It would require a lot of technological change. There's also not necessarily a guarantee of larger dividends if that unit were to be spun out. Now, something else that's really been interesting that analysts have been pointing out is that issue of profitability. We hear that issue of Asian profitability, but what antagonists to that viewpoint say is, look, there may be a lot of profits to be had in Asia, but a lot of that profitability is from companies from outside the region that would not necessarily bank with HSBC if it were spun out.
So, Charlie, how likely are we to see pressure for not just the banks, but also these larger multinationals to spin off or actually refocus efforts in Hong Kong and Asia more broadly going forward?
Yes, so that is the big story of the day, right? That is this realignment between the U.S. and China, companies being forced to pick sides, essentially. And I think one of the large questions we're going to be continuing to ask is, can multinationals continue to exist and operate as they have for decades in a world that's increasingly polarized, in a world of deglobalization?
Thank you so much, our Charlie Wells there, joining us on the very latest for HSBC. Now, plus, we'll dive deeper into the geopolitics around Nancy Pelosi's planned trip to Taiwan. I'm very excited that John Liu, of course, our bureau chief in China, joins us shortly. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 52 minutes into European trading day. Markets really on tenterhooks with U.S.-China tensions, also China-Taiwan tensions. Of course, that's our top story. House Speaker Nancy Pelosi set to land in Taiwan this afternoon. In the last few minutes, China's foreign ministry has said Taiwan would face disastrous consequences of the U.S.'s actions if the trip goes ahead. Let's bring in our Bloomberg executive editor for China, John Liu. John, thank you for joining us. I have a million questions. We were listening together, of course, to this presser by the highest-ranking foreign ministry spokesperson. I mean, it was fighting talks. There was it mentions about nuclear talks, unclear exactly what the consequences of the trip would be. What's your insight?
I think there is something to be said about Hua Chunying, the most senior spokesperson for the Chinese Foreign Ministry, doing the briefing today. It is a daily briefing they have. She does not do this briefing normally. The last time she appeared was in the aftermath of Russia's invasion of Ukraine. And so obviously when there is something sensitive that Beijing wants to discuss, wants to express to the world, she tends to be the person who does it. I think that casts today's briefing in a special light. That being said, the rhetoric is especially hot at the moment. That does not necessarily mean that there will be any intense action militarily. We do expect some response from Beijing with Speaker Pelosi's visit. Will it go into the territory of some sort of conflict? That seems unlikely at the moment. The specifics, I think we will get more of that as the day goes on.
John, I mean, when they talk, and I know this is a very difficult question, but when they talk about, resolute measures, if the Pelosi trip to Taiwan goes ahead, are they trying to deter the trip for going ahead? And can the U.S. afford, like at this point, I don't know what happens. The U.S. can't suddenly say, well, or Nancy Pelosi can't say, or I don't necessarily want to go. But do we know what these resolute measures could look like?
They are obviously trying to discourage the trip from happening. I think if Ms. Pelosi were to cancel the trip at this moment, I think most people would see that as a big win for Beijing. That is, I think, one reason why the trip is probably going to have to happen. In terms of what resolute response means, we've seen Chinese warplanes flying through Taiwan's air defense zone. There's been some talk that Chinese jets might try to escort Speaker Pelosi's plane as it approaches Taiwan. She's obviously flying on a military aircraft, so that would be extremely provocative. In the past, in the late 1990s, obviously China fired missiles which landed near some Taiwanese ports. That, again, has not happened in 25 years and would also be extremely provocative. Those are some of the things that are on the table. If it goes beyond that, I think we would be in very uncharted territory.
I mean, I feel like we're on the edge of chaos, John. Does Taiwan want this visit? We know that President Biden advised against it.
I think tensions are obviously high. I think the rhetoric is very strong at the moment on both sides. There is, however, I would say motivation. There is motivation to keep the peace for both the United States, China, and for Taiwan especially. I think the Taiwanese authorities, the Taiwanese government in Taipei, welcomes the visit by Speaker Pelosi. They welcome any expression of U.S. support for the government there. That being said, I think they are obviously not looking for any armed conflict. If this was to escalate further, the weight of the burden of those actions would fall squarely on Taiwan and its people. And so obviously there's motivation there to avoid any undue conflict. But I think it's hard to say at this moment.
John, thank you so much, as always, for your incredible insights. Our Bloomberg executive editor for China, John Liu. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We continue, of course, watching China. We continue watching what the markets think of China and what these tensions could look like. We'll have a full roundup of that China briefing from the highest-ranking foreign ministry spokesperson. We also look at Moller-Maersk, one of the biggest gainers. We look at BP, one of the biggest gainers, with actually Siemens Energy on the way down. So we'll have a full roundup also of your main market movers. This is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The Speaker has the right to visit Taiwan, and the Speaker of the House has visited Taiwan before without incident. The world has seen the United States government be very clear that nothing has changed. Nothing has changed about our one China policy.
I think it's a mistake for the Speaker to go to Taipei. The goal of foreign policy with respect to China is to reduce tensions, not to increase tensions. And her visit to Taiwan will clearly increase tension.
I think we've never seen an economy coming out of a shutdown like this at a moment like this. I'm optimistic that that this can be managed without having a full-blown deep recession, but it's not out of the question.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Tensions over Taiwan. The U.S. urges calm from Beijing as Nancy Pelosi is expected to visit the island today. Caution abounds while stocks and U.S. futures sell off as markets angst rise. Plus, BP buyback. The supermajor plans to return $3.5 billion to shareholders after reporting a beat on profits. Now, the market's definitely on tenterhooks because of the U.S.-China tensions. We had a pretty full-on briefing from the highest-ranking foreign ministry spokesman from China. The last time she did this daily briefing was right after the invasion of Ukraine by Russia. Now, in it, she did not mince words. She was really warning the U.S. about unintended consequences, and it's very clear that this escalating conflict between the U.S. and China could lead to consequences that the market doesn't really know how to trade. But there's a move towards havens, and also there's a move because they're concerned about the U.S. economy. European stocks down some 0.4%, a similar move for S&P futures, and then the U.S. 10-year yield. Again, you can see a bid into government bonds, yen 130.88. So overall, European stocks, now they're a little bit different depending on where you look at. For example, the FTSE 100, if we look at the European map, the FTSE 100, one of the indices in Europe that was losing the least. So you can see now it's pretty much flat. This is because of the weighting of BP, one of the biggest companies. BP is gaining 4.4% because they're giving back to shareholders in terms of dividends, but also share buyback because their profits were so large. So that's a different story, for example, to a DAX where you see 0.5% lower or a CAC 40, 0.3% lower. Now, our top story today, the House Speaker Nancy Pelosi set to land in Taiwan this afternoon, likely making her the highest-ranking U.S. politician politician to visit the island in 25 years. Now, the trip escalates tensions between China and the U.S., with Beijing warning of consequences should the visit go ahead. Well, joining us now is Samson Ellis. He's Taipei Bureau Chief, and John Liu in Beijing. So, Samson, first of all, what's Pelosi's plan while in Taiwan?
Well, from what we understand, she is shortly about to start her visit over here. She's going to land later this evening, according to sources. It's obviously quite late at the night. There won't be anything tonight. But then from tomorrow, we do expect her to have a series of meetings, obviously with President Tsai Ing-wen while she's here, and also with a range of lawmakers while she is here, and conduct, legislature to legislature diplomacy, so to speak. It's expected to be a very short trip, so other than that, there's nothing notable on the schedule as yet.
So, John, I mean, we're going through it together. There's this, pretty extraordinary briefing. What kind of reaction could we see from China?
Their utmost anger at the potential visit by Speaker Pelosi and trying to warn the U.S. off from doing it. I think if Ms. Pelosi were to call off the visit now, it would be seen as a fairly big victory for Beijing. I think that's probably the reason why she is definitely going to visit Taiwan, arriving tonight, as Samson was saying. What could Beijing do in response? They've promised some resolute measures. We've seen in the past Chinese warplanes flying into the air defense zone of Taiwan. We've seen back in the late 90s missiles fired by China into waters close to some Taiwanese ports. There has been some suggestion by commentators here in Beijing that the PLA could fly jets to escort Ms. Pelosi's plane. That would be extremely provocative. There's been a lot of rhetoric now. We just have to wait for the action.
We certainly do. Samson, what would a visit mean for Taiwan?
Well, obviously, Taiwan is often very hungry for this type of international exposure, or any type of international exposure, it being largely cut off from much of the international conversation. And so Taiwan usually welcomes high-level visitors because it doesn't get too many of them. And so typically, they do welcome these with open arms. But in this case, there has been very stern warnings from the Chinese side about potential consequences of a visit should it happen. And so we've seen the first salvo, so to speak, in terms of reaction from China today. There does appear to be a lot of military activity in the Taiwan Strait. These are all unconfirmed reports for now. But one thing that did happen late last night, though, is that China did enact a ban on food imports from Taiwan. Yeah. So this is the latest in a series of economic coercion from the Chinese side.
Yeah, I mean, extremely difficult, of course, game theory this to see how China could hit back over Pelosi's Taiwan visit. But John, through your years and decades of experience, why is Nancy Pelosi so intent on going to Taiwan, especially at a time where you also have this fractious with China being much closer to Russia than we thought when the invasion of Ukraine happened?
I think the invasion of Ukraine has led many people in the United States to believe that Taiwan could be like the Ukraine and could be the target, the victim of some incursion by China. And so that has added to this calling, this effort to try and strengthen Taiwan's defenses. I think that's why in the recent past you've seen a number of lawmakers, congressional delegations, former secretaries of defense visiting Taiwan, trying to show not only American but international support for Taiwan. I think we're expecting some British lawmakers to visit as well in the near future. That, I think, is the backdrop. I think the Chinese, the more international support there is for Taiwan as a state separate from the mainland, I think the more that draws China into a situation where it feels like it has to react very strongly to show a very strong hand in that situation, especially with a very important party Congress coming later this year where President Xi Jinping is expected to secure a precedent-breaking third term, so not really much room for China to maneuver politically here.
Yeah, and Samson, I know we look at it from, through a foreign policy lens, but if you look at the Taiwan Strait, this is one of the primary routes of ships passing from China, Japan, South Korea to points in the West. So how much shipping disruption could we see if something ugly were to happen there?
Well, that's precisely the question. A lot of security analysts in this part of the world are desperately trying to ascertain. As you said, it's an incredibly important shipping route, in both directions, oil and the like, and or up to the places like Shanghai and further, and Japan further afield, and then all the manufactured goods out of China and to the rest of the world. And so that is one of the fears right now that we are increasingly hearing from analysts, is that even a small disruption, and also at a time where the shipping industry is battling back from the COVID disruptions that has created an incredible backlog in the industry, and that even the smallest disruption in this crucial area could have really quite severe unintended consequences.
All right, thank you both for joining us. Samson Ellis, our Taipei Bureau Chief, and of course our Executive Editor for Greater China. He is John Liu. We'll have plenty more on this, and if anyone has a Bloomberg terminal, we have a wonderful blog really going through the nuances of some of that briefing from China that finished about 15 minutes ago. Now, for all of the latest market moves, we're also joined by Bloomberg's Justina Liu. Justina, thank you for joining us. I mean, I don't even know how to start trading this, because actually we don't exactly know the consequences would be. Unclear, frankly, to me, despite that terrific briefing from Samson and John, why Nancy Pelosi would go ahead with this. So what are you seeing on the markets?
Right, exactly. I mean, it really is like a textbook case of risk aversion today. And it really is, the market's knee-jerk reaction to what is potentially a very serious geopolitical risk. And so we're seeing, the dollar and the yen go up, bonds coming down, bonds going up as well, and also kind of stocks coming down. And of course, this is kind of all happening in a context where markets were already getting increasingly concerned about a recession.
So are we just going to see more of a bid for treasuries? I know there was a bit of a quirk with yen, for example.
Right, exactly. I mean, I think there are like two things going on. I mean, one is like this is, these rising tensions between the world's two big superpowers can potentially be very severe in markets. And on the other hand, I mean, investors are starting to think about, dialing back expectations possibly for Fed tightening, because perhaps they are winning the inflation fight after all, or perhaps the economic growth is slowing. And so I think those two things are both kind of helping to bring down Treasury yields right now.
I mean, it's kind of one of those days where market participants are suddenly like foreign policy experts again, especially with the Taiwan Strait. What exactly is priced in? Just some kind of like skirmish geopolitically, or are we going to have to look at that shipping? And I know our Valerie put together, we have all this wealth of information on the Bloomberg terminal. We actually see the Taiwan Strait and what it means for shipping worldwide.
Yeah, I think the sense is like, even though we have had, rising tensions between the two parties for a while, I don't think people kind of have really thought seriously about the prospect of a serious conflict. And I don't think that's kind of currently what the market is expecting yet.
I mean, look at that. It's beautiful. Like, I'm still in awe of what we can do with the Bloomberg terminal, because that's individual ships. And actually, if you wait close enough, you can see them move. I mean, already prices for freight that, could go up significantly if we see something in that strait happening.
Yeah, and today, we saw a big reaction in the Taiwan dollar, which normally doesn't really move. And part of that is people are also worried about economic consequences for Taiwan. And at the same time, Taiwan is kind of a big place for semiconductor production. And so there could be implications kind of beyond its shores and for a lot of tech companies as well.
Justina, thanks so much. Justina Liu with the very latest, of course, on this. We'll have plenty more on some of the Haven bids, and we'll see exactly what happens in the next couple of hours. Coming up, the BOE expected this week to push through the biggest interest rate hike since the mid-90s. More on their battle against inflation next. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's focus on central banks. The Reserve Bank of Australia raised its key interest rate by 50 basis points to 1.85% as expected by most economists surveyed by Bloomberg. Now the bank holds the view that inflation will peak over the coming months and that they're open-minded about the size of rate hikes from here. Now on the subject of 50 basis points, the Bank of England also expected to deliver its biggest rate hike in 27 years this week. Now the UK's central bank will also unveil its strategy for unwinding some of the £895 billion of stimulus it has delivered over the past decade. Well, with us now is the chief European economist at PGIM, Catherine Neese. Catherine, thank you for joining us. First of all, when you look at inflation, I'm looking at the wrong camera. There you are, Catherine. When you look at inflation, when you look exactly at what kind of inflation the central banks can take care of in the world, can they even engineer a soft landing? How much in a tricky situation is the Bank of England right now?
The bank is in a very tricky situation. It's a little bit piggy in the middle between what we're seeing in the US and in the euro area. And those economies are facing very challenging situations themselves. So it's a bit amplified, I would say, here in the UK. You make the point about the drivers of inflation. And in the UK, we're getting hit with the double whammy of both a very tight labor market that's leading to higher domestic inflationary pressure, as well as, of course, these higher energy prices that we're seeing on the continent feeding through and impacting on the UK economy as well. So the bank will want to strike a balance between, in some ways, looking through some of the pressures that we're seeing on inflation, as we're seeing just now, and yet ensuring that this does not become recurring inflationary pressure going forward.
Catherine, do they have a harder job actually than even the ECB in certain respects? And they had the first mover advantage. Has the BOE now squandered that?
The Bank of England has been an early and consistent rate hiking central bank. And my view is that that should stand it in good stead. I expect to see them to continue to raise rates at the meeting later this week and perhaps for a month or two still to come. But that said, we are expecting the economic impact of the shocks that we've been experiencing over the course of this year to start to come home and really impact on the real side of the economy. And that should curb the Bank of England from raising rates substantially further, I would have thought.
Catherine, what do you most worry about, the ECB or the Bank of England? Who's in danger of underwhelming the markets more? And should they be worried about underwhelming markets?
Well, they both face their own very unique challenges. The additional factor that I think will weigh on the minds of the Bank of England in a way perhaps less so for the ECB is what's happening to the exchange rate here. So we've seen that in the US, the Fed has taken a very aggressive rate hiking path, and that is weighing substantially on sterling. It's weighing on the euro as well, but the UK is a much smaller open economy. This really does translate into meaningful upward pressure on UK inflation in a way that it doesn't in the euro area. So that's going to be an additional factor that the MPC is going to need to think about here at the Bank of England.
But Catherine, is there anything actually that anyone can do to push back against King Dollar ever higher?
Well, I think if central banks are setting policy mainly to influence exchange rates, it's probably a losing game. The Bank of England will need to set policy that's appropriate to the domestic economy. But that said, it is a smaller developed market economy that has a flexible exchange rate. And so you could see the Bank of England to a degree getting pushed to have to raise rates more aggressively than perhaps it would like to, given the state of the domestic economy here in the UK, simply because the exchange rate does have such a meaningful impact on headline inflation.
Catherine, I know we're in politics right now because there's this race on who will be the next prime minister and who will lead the Conservative Party going forward. But given the two candidates, can they really change the outlook for the UK economy depending on what they put in place in terms of taxes, but also, paying some of the civil servants?
Well, as you say, both of these candidates are going to be much more aligned in terms of being fiscally conservative. But there is probably a bit of chink of light between them from how they've been campaigning. Whether they are able to actually put some of those through, whoever ends up being successful in the leadership bid, I think does remain an open question. Whoever does win, I would expect us to see a little bit more fiscal support coming through, given that this shock just is not going away, and if anything, looks like it's intensifying in terms of the squeeze on cost of living. So I would expect whoever we end up with as leader, we are going to see a bit more fiscal support, and that will help with the margin. But whether it's really going to change the course of the macroeconomic outlook, I'm probably a bit more skeptical on that.
Catherine, thanks so much. Catherine Neisser, Chief European Economist at PGIM, joining us on this extremely important week. Coming up, Credit Suisse's credit outlook caught negative by S&P Global Ratings. More on the embattled Swiss bank in just a few minutes. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Welcome back. Bloomberg Surveillance Early Edition. Let's get straight to the Bloomberg. First word news. Here's Laura Wright. Hi, Laura.
Hi, Francine. The man who took over the leadership of al-Qaeda from Osama bin Laden has been killed in a U.S. drone strike in Afghanistan. President Biden approved the strike and confirmed the killing of Ayman al-Zawahiri, which took place in Kabul over the weekend. The U.S. says he helped plan the 9/11 terrorist attacks. China's top leaders are said to have told government officials this year's economic growth target is only guidance. Bloomberg understands it was made clear the GDP growth target of around 5.5% won't be used to evaluate performance, and there won't be penalties for missing it. Ukraine has laid out plans to ramp up grain exports following its first shipment since Russia's invasion. The shipment was hailed as an encouraging first step to unblocking millions of tons of crops and easing global food prices. The first 2 weeks will be treated as a trial period, with no more than 3 vessels a day passing each direction through new safe passage corridors. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Thank you so much, Laura Wright, with the very latest, of course, of our top news. Now, speaking of top news, what the market is looking at is that Nancy Pelosi trip to Taiwan, the standoff between the U.S. and China over Taiwan, has really also thrown a spotlight on growing risk to one of the world's busiest shipping lanes. Even a minor disruption could actually ripple through supply chains. Now, that's putting a lot of pressure on some of these European stocks. You can see they're down some 0.5%, similar loss for the DAX, 0.5% lower. If you look at the FTSE, it's gaining 0.1%, but this is really because BP giving back to shareholders in terms of dividends, in terms of buybacks, and BP is such a big company for the FTSE 100 as a whole. Coming up, we'll have plenty more on some of these reporting companies. We talk Hsbc. More on that story next. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft. And do by machine what should be done by hand.
Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Bloomberg Surveillance Early Edition, and here are your top stories. Tensions over Taiwan. The U.S. urges calm from Beijing as Nancy Pelosi is expected to visit the island today. Caution abounds while stocks and the U.S. futures sell off as market angst rises. Plus, BP buyback. The supermajor plans to return $3.5 billion to shareholders after reporting a beat on profits. Now, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, first thing is first, let's check in, as always, on the markets. We're seeing a lot of anxiousness out there. This is because of these rising tensions between the U.S. and Taiwan. Again, the standoff between the two countries over Taiwan has also thrown a spotlight on some of the growing risks when it comes to the world's busiest shipping lanes. Even a minor disruption could ripple through supply chains. That exactly is where markets are trying to price in a clear bid to some of the havens, including government bonds, with the U.S. 10-year yield at 2.56. European stocks down by about 0.5%, as is the S&P futures. Now, spooked by years of scandals, losses, and an ongoing leadership shakeup, Credit Suisse has handed out more than $300 million in a month to retain top bankers. But last week, the chairman, Axel Lehmann, also discussed how the bank plans to keep talent.
Why should I stay at Credit Suisse if I'm an employee holding stock that's 60% lower than when Gottstein arrived? Why should I stay here?
Because they look forward. There's huge potential.
Will you have any problem fulfilling the strategic mandates that you have from institutional clients? Is it going to be tough to keep people here at the bank?
Sure, you need to manage that. You need to speak to people. But, you know, our people are excited about the way forward.
Now, let's bring in Bloomberg's UK finance team leader. He is Tom Metcalf. Tom, thank you so much for joining us. I feel like you're my recruiter special because you understand the intricacies of these investment bankers. If you continue having, even if you're paid millions more, if you continue having Credit Suisse on your CV, are you tainted?
Yeah, I mean, it's certainly a franchise right now which is really in trouble, and I think you're seeing that in terms of people leaving that en masse. So that's why you're kind of seeing this reaction from the bank that in order to keep their best talent, they're really having to make these pretty big, pretty extraordinary retention payments. So some of the details we've heard is, you know, you get a rainmaker being guaranteed $10 million over 2 years. So it's those kind of steps. Yeah, I mean, made me very jealous.
And you reminded me, you know, the $300 million that they're basically paying out in an extra compensation to keep the good talent is not over the year. This is what, over a 4-month period?
No, 1 month. So
1 month.
It was basically disclosed.
$300 million in 1 month they're dishing out.
So that is just the month of July. So, and that compares to like that kind of figure for the whole of last year. So it shows, I think, they're really struggling to keep people, and they're really having to take some big steps.
So what does it tell us about the situation at Credit Suisse? They've also hired actually some high-profile people.
Yeah, so look, they came out at results and said, hey, we're trying to pivot towards a sort of capital-light, advisory-led model. So it seems that they're really diving into kind of trying to keep rainmakers, trying to attract that kind of talent. And obviously one of the levers they can pull is the money lever. But obviously, you know, talent looks at all sorts of things. And you're right, you know, is Credit Suisse a bit too tainted right now, even if you're being offered big money to join?
Tom, thank you so much. Tom Metcalf there, one of our team leaders for UK and EMEA finance. Now, on to another big bank story, and in just a few hours, executives at Hsbc will try something they have not in 3 years, meeting face-to-face with their uneasy shareholders in Hong Kong. We're joking, we're telling about the average I guess, age of that shareholder. Now, the bank caught in a crossfire between the U.S. and China, retail traders and executives, backers of its global model, and its largest shareholder. Well, here to discuss all of these tensions, Charlie Wells from Bloomberg News. Charlie, so much writing on today's meeting in Hong Kong, and actually, usually, I mean, they get yelled at, right, by shareholders that come. I'm not saying Zimmer frame, but certainly saying, why is my share price not good enough? So, what kind of line are the chairman and chief executive going to toe?
Well, this is a really dramatic day for a bank that does not like drama, right? So we have seen over the past few months Ping An Insurance Group calling for the Asia unit of HSBC to be split off. And what's an interesting twist here is that these retail investors are also falling in line with that position. Retail investors make up about a third of the shareholders of HSBC. They've been really upset about dividend payments being canceled during the pandemic, and they want change.
Yeah, they certainly do want change. Now, splitting up HSBC, who's for it, who's against it?
Okay, so the retail traders are generally for those Hong Kong-based retail traders. Ping An Insurance, of course, is for that as well. And what they say is that the HSBC's Asia unit is more profitable, right? About 65% of profits come from there. They see more value creation. One study showed about, I think it was maybe several $1 billion in value created from that, as well as control over those dividends. Of course, HSBC executives have been making the case this week, and presumably very soon, that the bank should stick together, that it would be too risky to split up, that it would be too costly, and that if you look under the hood of profitability, you actually see that business from Asia, a lot of that is actually business from outside the region that could potentially disappear if that unit were to be spun out.
So, Charlie, give me a sense of, I mean, is this pressure that's not only for some of the big banks, but are we going to see pressures on, in general, big companies refocusing on Hong Kong so that you know what you're looking at in terms of value?
Francine, you're hitting on that huge issue right now, and really Exhibit A here is Alibaba, right? So Alibaba is looking for a primary listing in Hong Kong. Politicians who have sided with retail traders in Hong Kong have said that they want HSBC to potentially do something similar, to list in Hong Kong. That could be very complicated and difficult, but it shows that there is pressure between companies who sit in both Asia and in the West to pick a side.
Yeah, biggest story that we're covering so far. Charlie, thank you so much. Charlie Wells there, looking at all of the banks, especially HSBC. Now let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Maersk has raised its profit forecast for the second time this year after congestion on trade lanes boosted global freight rates. The Danish company, which controls about a sixth of the world's container trade, has benefited from a shortage of shipping capacity, what it called an exceptional market situation. Maersk says earnings before interest and tax will be around $31 billion this year, far above its previous forecast for $24 billion. There's a report that Estée Lauder is in talks to buy the luxury fashion brand Tom Ford. According to the Wall Street Journal, a deal could be worth $3 billion or more. Tom Ford is known for its menswear, although it also sells women's clothing, cosmetics, and fragrances. Pinterest shares jumped more than 20% in late trade after it reported resilient sales and user numbers, and Elliott Investment Management confirmed a major stake in the company. The search and discovery platform says it had 433 million monthly active users in the latest period, broadly unchanged, but better than analysts had forecast. That's the Bloomberg Business Flash. Francine.
Thank you so much, Laura. Coming up, BP boosting dividends and buybacks. That's as the oil giant's profit rose to the highest since 2008 this quarter. We'll have plenty more on that story next, and this is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, China has slammed the U.S. over Nancy Pelosi's visit to Taiwan. Our reporter was at the presser conference. It's Colin Murphy, and he's in Beijing now. Colin, we had some pretty stark warnings from the Chinese. It was the highest-ranking foreign official to give that briefing, something that we hadn't seen since Russia invaded Ukraine. What could they do in retaliation?
So yes, I'm standing, as you can see, outside the foreign ministry here, and as you mentioned, that they did roll out Hua Chunying, which is like already a signal. It's quite rare that she comes to talk to us, and today was one of those rare occasions. She basically was talking about certain things, some of it quite menacing, such as, for example, the U.S. will pay the price for undermining China's interests. And she also warned that Taiwan itself would face disastrous consequences if this U.S. side misjudges or miscalculates over the Taiwan Strait. She criticized the U.S. and Washington for backtracking and for hollowing out this one China principle. And she reiterated that the Chinese side had, on many different occasions, communicated with the U.S. side, and that they were hopeful that the U.S. side would get the message very clear. That the Chinese side are obviously has huge displeasure over this trip by Nancy Pelosi to Taiwan.
But so, Colin, I mean, I'm sure they're trying to deter Nancy Pelosi from going to Taiwan. It's probably a little too late. I could be wrong on that. But we're also speaking to our executive editor, John Liu, who is saying, you know, what we could see is Nancy Pelosi's plane, which is a military U.S. plane, is my understanding, escorted by one or two or more Chinese planes. I mean, how would that go down?
Well, I think that would be like the ultimate in terms of provocation from the Chinese side. And, you know, we aren't, there's a lot of speculation going on. There's a lot of talk going on. So it's really hard to say at this point. And you're right, there are still 6 hours to go. I mean, anything can happen between now and then. But there was one telling detail, which was a meeting that's taking place in Cambodia in the coming days. That's of the foreign ministers of the ASEAN. That's a group of nations in Southeast Asia. And both Antony Blinken from the U.S. and also Wang Yi from China will be present at that meeting. However, there is no planned bilateral meeting between the two. And that speaks volumes to a possible displeasure from the Chinese side over what's going on in the Taiwan Strait. However, Hua did not rule out or did not dismiss the possibility of a visit, of an in-person visit or an in-person discussion between President Xi and President Biden, which might take place, was reported to be taking place later this year.
Yeah, and I have to say, Colin, we need to talk a little bit about Taiwan Straits. Not many people know how significant this is as a shipping route, of course, from east to west. So we can track some of the movement in that strait thanks to Bloomberg Terminal. It's completely extraordinary. But what would this mean for ships? I mean, is this the biggest economic consequences we could see from something going wrong?
It's definitely one of the biggest consequences. And again, depending on who you talk to, you get some people saying that the risk is not as much as we anticipated. But obviously shipping is important, not only for countries like Japan and South Korea, but also for China itself. But I would also say, you know, look at the semiconductor industry. That's probably possibly even more significant in terms of what's at stake here, because of course Taiwan is home to TSMC, which is the world's largest chip manufacturer, and China is reliant on supplies from there too. So whether it be shipping, whether it be chips, there's definitely a lot of economic factors at play here in the decision making.
Yeah, extremely interesting, Colin. Thank you so much, of course, for that terrific briefing on the ground there. He was at the press conference given by the highest-ranking foreign official ministry from China, Colin Murphy, there in Beijing, with the very latest on these political tensions. Now, U.S. Republicans are using an obscure rule named after the Senate's longest-serving member to challenge provisions of the Democrats' surprise tax, health, and climate deal. Now, that's as the party aims to whittle down the legislation. Now, with us is Stephanie Kelly, head of thematic sustainability research at Red Wheel. Stephanie, we have a lot to talk about. We're also going to talk about BP and actually looking at the transition. But for the moment, what's happening in the U.S. in terms of, you know, the focus on sustainability and the focus on cleaner energy, given all of the unknown with secure energy?
This is, I think, in some ways really links into some of the geopolitics you've been talking about earlier in the show. Is what's really striking about the climate deal that the Democrats are trying to push through is in part around how they've used the language of energy security and, you know, specifically issues with Russia and with China to really reinforce that renewable energy and climate change is part of tackling sort of a geopolitical agenda as well, which I think is strengthening the hand of the discussion that's taking place. I think this week, the big question mark is going to be Kyrsten Sinema. She's been relatively quiet. She hasn't said anything about this new bill. It's always been her and Joe Manchin who've kind of been the thorn in the side of Joe Biden trying to get climate done. Clearly now Manchin has been part of this bill. So the big question mark for this week is, does Kyrsten Sinema come out in support? And if she does oppose, what parts of the bill does she oppose?
Yeah, so what's your interpretation of the fact that we haven't heard actually what the intention was?
So there's definitely some concerns growing in DC. It's very evident. You can see over the weekend. I think the question mark is just why hasn't she come out and said anything? The expectation is she might have an issue specifically with one of the what's being described as kind of closing a loophole on investment profits. In the past, when she's been involved in that kind of bill in the House, she's kind of pushed against it. So it looks like it might not necessarily be the climate part of the bill that's going to cause issues, more so the tax side. And so this is where, again, climate always gets caught up in the politics. The short-term politics tends to kind of trump long-term climate change action. And we continue to see that not just in the US, but actually all over the Western world.
But Stephanie, how does this actually change the domestic energy production and resource control in the U.S.? Given what's happening with Russia, given these, you know, escalating tensions between the U.S. and China, are the U.S. going to want to take much more control back?
And so the short answer is yes. And in particular, the advantage that renewable energy provides for a lot of countries, the US specifically, is the more control you have over it. It's created in-house, right? So a wind farm or solar, a lot of it can be created in-house. And it's quite striking that in the climate deal that they're pushing in DC at the moment, there's a lot of talk around specifically, you know, renewable energy, investment, resource, production. And that's all, I think, part of not just addressing climate change, but also addressing energy security and ensuring that what you do kind of within a country can be really domestic, onshoring. And I think that's really borne out in this way. And it kind of kills two birds with one stone for the Democrats.
Stephanie, we keep on talking, of course, about this transition into a greener economy. But when you look at, you know, the price, but also demand for coal significantly rising, giving all of these energy security uncertainty, what does it mean for the energy transition? Will we get there slower, or are we just not going to get there?
Well, this is the big question mark that's come through in all the debates, right? In theory, you know, I've talked about it, energy security, renewable energy is the answer for lots of countries potentially. The problem is that takes time. You have to invest, you have to build the resources, you have to build the intellectual property. And so in the meantime, what you're seeing is, particularly in Europe, this kind of squeeze on, but we are still a fossil fuel reliant economy. And this is where I think we need to be really cautious. It's great to aspire to net zero. It's really important to aspire to it. But we also have to address the reality, which is, as things stand, economies really run on fossil fuels still for the most part. And so particularly when you see countries like Germany turning back on their coal plants, when you see concerns about the squeeze that's coming through in terms of coal and oil supply and gas supply for the winter, I think we're really going to see the realities bite. And when that short-term reality bites...
Yeah, the short-term reality bites, finish off, and then I have a question on inflation.
Sure, yeah. When the short-term reality bites, the problem you get is that the climate change action has to be pushed back because it becomes, how do we get a new gas contract in place? And that time that's taken getting a gas contract in place builds up a long-term supply for that gas that may, in another world, have gone into renewables.
And Stephanie, overall, is the transition automatically inflationary to a point where, we have some of the renewables cheaper otherwise?
Well, this is where I think what we've been really astounded by over the past kind of 20, 30 years was the expectation was solar was always going to be too expensive to be a really viable alternative. I think the bigger problem is going to be around storage, and we continue to see these issues. How do you store renewables so that it is a genuinely viable, complete alternative to fossil fuels, especially in the context of, the kind of prices we're seeing with fossil fuels, and that has not been solved yet, which is going to be a big part of the economic picture around the long-term inflationary consequences of a renewable transition.
Thank you so much. Stephanie Kelly, their head of thematic sustainability research at Red Wheel. Now, we also stay with the transition, but actually look at BP hiking its dividend and accelerated share buybacks to the fastest pace yet after profits surging. The oil and gas industry boosting returns to shareholders as the cash rolls in, even while the energy crisis triggered by Russia's invasion of Ukraine threatens the global economy. Well, joining us now is James Heron, our European oil editor. James, BP earnings were really outstanding. Are they doing better or worse than their peers?
They certainly seem to be increasing their returns to shareholders faster than their peers. 10% hike in the dividends, plus a big acceleration in the share buybacks. A more significant acceleration than we saw from Shell and Total, its closest peers in Europe. It's certainly giving a lot more cash to shareholders, the kind of returns they've been demanding for years and years now. But obviously BP, because of the invasion of Ukraine particularly, is in perhaps more of a weakened position because its shareholding in Rosneft, which it's being now trying to exit, was accounted for a big proportion of its oil and gas production. So that's also on the detriment side here.
So does this, this inside out, right? What does BP do next? They were going to be greener. Does this actually put in jeopardy that because shareholders are not happy because they're getting, so much money from these cash cows?
It doesn't seem to be putting that in jeopardy. They're holding their capital expenditure plans pretty much the same, despite all this extra cash that's coming in, way more than they thought when they made these plans. They're still talking a lot about the transition. They haven't made any really huge deals they're not buying any giant utilities or anything like that, but they say they're going to keep investing. There's no sign really that they're pumping extra cash into oil and gas either. So they say they're just going to stay the course, really.
All right, James, thank you so much. As always, James Heron there with the very latest on BP. And actually, thanks to BP, the FTSE is holding stronger than others. It's still down some 0.2%, but not as much as other European bourses. Coming up, Ukraine makes its first shipment of corn since Russia's invasion, a small but crucial initial step towards boosting global food supplies. That story is next, and this is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth. and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Bloomberg Surveillance Early Edition, we're looking at Hong Kong, and of course we're looking at some of those HSBC headlines. The pressure has definitely been mounting on the bank ahead of the meeting with Hong Kong shareholders. We just heard from the chairman, Mr. Tucker, apologizing to investors for scrapping the dividend, but he once again says that splitting up HSBC structures, which is what its biggest, of course, shareholder wants, Pyongyang, will destroy value. That's according to Mark Tucker. Joining us now is our expert on everything foreign policy. He's Mark Champion. He's our Bloomberg senior reporter for international affairs. So Mark, good morning. This is a very significant step into easing these global food prices.
It is. I mean, you already saw an impact on prices. It has to be said that it's for about 2 weeks. This is just testing. So there's just going to be a few ships for the first 2 weeks, 5 or 6 ships, just to make sure that this is secure and that the routes work and so on. The Ukraine is taking it slow. After that, it can really ramp up. And you could see Ukraine exporting as much as half of what they exported last year.
You're really one of the experts also when it comes to Russia and, for example, the ties with China that historically weren't very strong, that have become stronger without the combination of China. Nancy Pelosi shows up in Taiwan. What does that mean for that relationship?
Yeah, it's an interesting one. I mean, I think one way to look at it is we don't know exactly what lessons the Chinese have been drawing from the war in Ukraine, what lessons they've been drawing from the Western response, from how Russia behaved. So how they decide to take on Pelosi could tell us a little bit about that.
Mark, thank you so much. Mark Champion there with the very latest. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller, Kaylee Lyons in New York. Or Anna Edwards is in London, and this is Bloomberg. Is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. But I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
The Speaker has the right to visit Taiwan, and the Speaker of the House has visited Taiwan before without incident.
I think what has happened with Speaker Pelosi's trip is she has raised very high expectations in Taiwan, very high anxieties in China.
I think it's a mistake for the Speaker to go to Taipei. The goal of foreign policy with respect to China is to reduce tensions, not to increase tensions.
There's no reason for this to come to blows. There's no reason for this to erupt into some sort of conflict.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kayleigh Lyons.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Tensions over Taiwan. House Speaker Nancy Pelosi is expected to visit today. China threatens a military response. The markets react. Global stocks retreat while investors seek havens like treasuries and the Japanese yen. And another big quarter for another energy giant. This time it's BP, which raises its dividend and accelerates share buybacks. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kayleigh Lyons in New York. And Kayleigh, a certain amount of angst now hangs over these markets.
Absolutely. Geopolitical risk instead of recession risk is really what is front and center today, Anna, as the world kind of digests escalating tensions between the two largest economies in it. As we expect, Nancy Pelosi will be touching down in Taiwan in about 5 hours from now. So that definitely hung heavily on the Asian session overnight. Stocks really lower across the board. The MSCI Asia Pacific Index as a whole was down a little more than 1.2%. But of course, you saw China down, you saw Hong Kong down, and Taiwan's benchmark was down as well. Those stocks down about 1.6%. You also saw it show up in the Taiwan dollar, which is actually at its weakest level against the U.S. dollar, going all the way back to May of 2020, trading just under 30. And the dollar is weakening, however, against the yen, really seeing that safe haven bid or perceived safe haven bid showing up in the Japanese yen. It is strengthening against the dollar now for a fifth day in a row. That's the longest streak going back to April of 2020. And right now, just underneath 131, that is the strongest level for the yen in about 2 months, Matt.
Yeah, you can imagine that markets are getting a little bit tense right now, obviously. It's not just Nancy Pelosi, but she's flying in with a fighter jet escort. So bringing American military power into territory that China considers its own. S&P futures, as a result, down 0.2% right now. And of course, we did close the session down yesterday in the cash trade, about 0.3%. Investors are buying 10-year debt right now. That pushes the yield down to 255, just about 2 basis points from a relatively high level. So you could see this move further, especially if tensions build. She's supposed to land there, I think, around 3:20 London time, which is, 10:20 U.S. time, so just about an hour after the market opens. NYMEX crude down 48 cents to 93.40 right now, and Bitcoin down 1.4%, but still at 22,804. So obviously that's a correlated asset, but really watching closely how China responds to the Speaker of the House flying in with a military escort to Taiwan today.
So, Matt, in terms of the European markets, we are seeing some of this angst, but we're really in a bit of a limbo, aren't we? Waiting for developments, waiting to see if the House Speaker does, as we expect her to do, land in Taipei later on today, and then how China responds, as you say. So this is the response, this is the setup that we have in markets right now. We have weakness from European equity markets, but not in all of them, because we have other stories to deal with here, in particular surrounding earnings. Let's have a look at some of the moving parts when it comes to the European equity story today. So weakness, the broad theme, but you can see London and Spain are moving higher. The London market moves higher, despite the fact we got some weakness on oil prices. Matt was talking about the WTI price. Here's Brent at 99.28. So we've dropped down below the $100 a barrel mark on the Brent global benchmark. BP, the share price there, doing a lot of the heavy lifting in the London market, and this very much to do with the results that this energy major has now reported, up by 3.7% for this company in just today's session. Close to perfect is the way that one analyst described these numbers. Exceptional is the way that the business describes its own trading performance over the last quarter. The highest profit in some 14 years. So some strength coming through once again. It's in keeping with the narrative we've seen from these oil businesses recently. And again, keeping with that narrative, the focus on return of cash to shareholders through dividends and buybacks. We put in the Muller-Maersk share price. We expected to hear from them tomorrow. We got a pre-announcement today. The results so good. The guidance upwards and on the share price today. We will hear from the CEO, though, of this global shipping business in tomorrow's programming. And we put in the pound. The focus really is on risk off. And so the pound is retreating against the US dollar as part of a broader risk off trade. But we're getting closer to that Bank of England policy meeting on Thursday. The market expects 50 basis points, but there are a lot of people saying actually maybe only 25, Kaylee.
Yeah, I've heard that from a few guests over the last couple of days as well, Anna. And while we are looking ahead to that Bank of England decision on Thursday, there is also a lot to pay attention to on this Tuesday. Earnings will continue here in the U.S. You have Caterpillar, Starbucks, Airbnb, Uber, also among the companies scheduled to report earnings. Then we'll get some economic data with JOLTS job openings at 10 a.m. Eastern time, an interesting read ahead of Friday's payrolls report. Plus, Fed Speak is on the docket. Markets are braced for commentary on that interest rate outlook. How much do they push back on the market now expecting less aggressive tightening from the Federal Reserve? We'll hear from Chicago Fed President Charlie Evans, as well as Jim Bullard of the St. Louis Fed, and Loretta Mester of Cleveland will be speaking as well. And of course, the big event of today that we've already mentioned, House Speaker Nancy Pelosi is expected in Taiwan at 10:20 p.m. local time on Tuesday, so about 5 hours and 15 minutes from now, according to a report, Matt.
All right, it is Tuesday. Let's check in right now with our global team to get coverage of Nancy Pelosi's trip to Taiwan. Samson Ellis joins us, the bureau chief in Taipei. Bruce Einhorn, our correspondent in Hong Kong, and Joe Matthew, our Washington correspondent in D.C. right now. Samson, let's start with you. What kind of response, I guess, are we expecting? Is Taiwan's military getting ready for Nancy Pelosi to land in Taipei?
Well, they've come out with a statement today to say that they are ready. They have said that they are monitoring what appears to be increased activity in and around the Taiwan Strait, presumably from People's Liberation Army military assets. But they've said they've absolutely got the situation under control. As for broader Taiwan, well, the response here so far is, quite frankly, a bit of a collective shrug. You know, people do welcome these types of visits. You know, Taiwan is a little bit starved of international attention. And so any kind of visits, like high-profile visits like this, that Taiwan can get, you know, they'll happily take them. But quite frankly, right now, with the additional circus and the additional threats going on, you know, there are negatives for Taiwan. We've already seen today, for example, as well as this increased activity around Taiwan, we have seen China ban a whole raft of food imports from Taiwan And so they're really, attempting to exert further economic pressure on Taiwan because of this visit.
Okay, Samson, thank you very much. That's the view on the ground then in Taipei. Samson Ellis, our bureau chief there. Let's get to the China perspective. China, which regards Taiwan as part of its territory, has vowed to an unspecified military response to any Nancy Pelosi visit that risks sparking a crisis between the world's biggest economies. China's foreign ministry spokesperson spoke earlier.
The position and the attitude of the Chinese side has been very clear. China has on many occasions made it clear our position on this, and we have made serious demarches to the U.S. side. We are also closely following the itinerary of Speaker Pelosi, and if the U.S. continues down the wrong path, we will take strong and resolute measures to ensure our sovereignty and security interests.
Okay, some of the commentary there coming from China. Bruce Einhorn has the latest on China's response. And as we would expect, the voices from the foreign ministry in China then, Bruce, giving some warnings about what could happen if we do see Nancy Pelosi land in Taipei.
That's right. So the foreign ministry spokeswoman warned about Nancy Pelosi in the U.S. Working with separatist forces. That's important because China has long said that one of its red lines when it comes to Taiwan is any formal independence declaration from Taiwan. So anything that smacks of separatism is something that the Chinese are very concerned about. When thinking about what China might do in response, it's worth looking to last year when there was a congressional delegation led by Senator Bob Menendez, chairman of the Foreign Relations Committee. He led a group to Taiwan. China responded with warplanes flying into the eastern side of Taiwan. China has had numerous flyovers into Taiwanese airspace over the years. It's also possible that there'd be military exercises in the Taiwan Strait. It's worth keeping in mind also that this is a response that we might not see in days, but rather in weeks and months. This is something that's clearly irritated Beijing a lot, and there'll probably be repercussions for quite a while. The other thing that China is probably also very concerned about is that in the United States, there really now is quite strong bipartisan support in Congress for Taiwan, probably stronger than it's been in quite a while. So Nancy Pelosi's visit would just further emphasize the extent to which Taiwan has really won strong backing in Washington.
All right, Bruce, thanks so much for joining us. Bloomberg's Bruce Einhorn there out of Hong Kong. Now, the White House urged China not to escalate tensions with the U.S. in response to Pelosi's visit, signaling that the Biden administration is bracing for Beijing to retaliate. John Kirby, the National Security Council spokesman, spoke with Bloomberg yesterday.
There's no reason for this to come to blows. There's no reason for this to erupt into some sort of conflict. There's no reason for the Chinese to use a potential visit by the Speaker of the House as some sort of pretext to escalate tensions higher than they already are. And I would remind you that in recent days and weeks, it is the Chinese side that has, through their rhetoric and their activities, including this live fire exercise, the ones that are escalating the tensions.
Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. And Joe, it's all well and good to hear that from the National Security Council, but the bottom line is Nancy Pelosi is flying in with military jets to Taiwan, which is territory that Chinese considers its own.
That's right, and I wouldn't expect an air show here over Taiwan, but there will be cover. General Milley has made clear from the Pentagon, the chairman of the Joint Chiefs, that the United States will provide the security needed to get Nancy Pelosi there and back safely here. But yeah, the messaging was very deliberate when we spoke with John Kirby yesterday. Number one, he says there's precedent for this trip, albeit it's about a 25-year-old precedent. It's been some time since the Speaker of the House touched down in Taiwan, but also that there is no change in policy. They're trying to turn this back on the Chinese to make it clear that the drama is coming from Beijing, not the U.S., and that the Speaker makes her own travel plans, makes her own decisions. The White House cannot tell her not to go. It was pretty clear, though, from members on both sides in Congress yesterday, Republicans and Democrats agreed that if she turned around now, it would be a very bad look for the U.S., and so they want her to go through with this trip.
Yeah, tricky geopolitically for sure, Joe. And speaking of other geopolitical news, President Biden says a U.S. drone strike in Afghanistan has killed one of the planners of the 9/11 attacks. Ayman al-Zawahiri was the leader of al-Qaeda, and according to a senior administration official, the drone attack had been planned for weeks. We heard from the president yesterday.
No matter how long it takes, no matter where you hide, if you are a threat to our people, the United States will find you and take you out.
So clearly, Joe, the president has had a lot of balls in the air dealing with the war in Ukraine, China and Taiwan, terrorism and threats in Afghanistan, and he also has to focus on his domestic agenda as well. On that front, on reconciliation, we're waiting to see if Kyrsten Sinema, the Democrat, is going to get on board, but we understand also the Republicans may have a few tricks up the sleeve of their own.
Well, yeah, they're going to try to challenge components of this legislation. And we still don't have the text in our hands, Kaylee, but we saw this. This is kind of the way it's done. We saw this with Build Back Better. There's something called the Byrd Rule that requires if you're taking this route called reconciliation, that it must be a budget revenue related matter. So you can't just throw any attachment on there and have a party line vote. We like to call it the Byrd Bath here in Washington while they're scrubbing the legislation, and Republicans are going to use that to challenge each component. There was a thought, for instance, that the prescription drug pricing plan may not technically count as part of reconciliation. The parliamentarian in the Senate is reviewing this right now. That's who handles the Byrd Bath, and we expect to learn a little bit more in the coming days. It's unclear exactly when they'll finish this, but I will remind you that a lot of this has already been scrubbed because there are so many carryovers from what we called Build Back Better last year that the parliamentarian has a pretty good sense of what is in there. And Joe Manchin and Chuck Schumer, when they hammered this out, were very careful to not have extraneous components that could be knocked out by the parliamentarian because time is running very short in the Senate.
Joe, thanks very much. Bloomberg's Joe Matthew. You can listen to Joe every weekday on his radio program Sound On. That's at 5 p.m. Eastern Time on Bloomberg Radio. Turning to some corporate news now. Here in London, BP is hiking its dividend and accelerating share buybacks to the fastest pace yet. That's after profits surged on high oil prices. James Heron, Bloomberg's European oil team leader, joins us now on set here in London. James, nice to have you with us. So this, the latest in a series of strong numbers, I suppose, from the sector. Give us the highlights.
Yeah, absolutely. Virtually every major oil company has announced share buybacks. They've all had amazing profits. BP was particularly far ahead of analyst estimates. It seems like its oil traders had an exceptional performance. But yeah, much like the rest of the sector, crude prices are very high, natural gas prices are very high. Their refineries are making amazing profits, and they're taking all this extra cash and they're mostly giving it back to shareholders.
And of course, that's been a bit of a political problem for them here in the United States, as the Biden administration has accused them of price gouging and prioritizing profits over consumers. Thank you so much to Bloomberg's James Heron. Now, as for some of the company stories we are watching here in the U.S. that are moving stocks in pre-market trading, I want to begin with one, and that is Pinterest, which is moving higher in a big way after reporting results after the bell yesterday. Not only did revenue and users come in better than feared, Elliott Investment Management also confirmed a major stake in the company, saying it's supportive of its management. So that stock is up 19% before the bell. A lot of stocks, though, are moving lower today, including Intel. And there's a few things that are going on here. On the one hand, that CHIPS Act just passed in Congress would indicate that any chip company like Intel getting funding would have to stop investing in production in China. So that's one headwind. The other is getting cut to negative on the outlook by S&P and getting downgraded to sell over at DZ Bank. So all of that together taking the stock down by about 1.2% before the bell. And finally, a lot of Chinese companies listed here in the U.S., those ADRs are under pressure as focus is so firmly on tensions between the U.S. and China as we gear up potentially in a couple hours from now for Nancy Pelosi landing in Taipei. One of those being Alibaba. It's down about 2.8% before the bell, Anna.
Kaylee, coming up on the program, we'll get back to the markets then. Maria Weitmeyer joins us, State Street Global Markets Senior Multi-Asset Strategist. What's her immediate response to the risk-off mood that we're seeing in these markets and the longer-term prospects for equities? More on the tensions in Taiwan. We'll be joined by Elizabeth Braw, Senior Fellow at the American Enterprise Institute. Plus, the bitter breakup. Goldman accused a trading pair of accessing sensitive code while leaving for a hedge fund. They say they're being unfairly tarnished. Read more about today's big take story on Bloomberg.com or on the Bloomberg terminal. This is Bloomberg.
you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Welcome back to Bloomberg Surveillance. This is the early edition. We are simulcast on both Bloomberg Radio and Bloomberg Television, and we're looking at a little bit of a sell-off in markets. It's mostly due to geopolitical issues, as far as I can tell, concerns about Nancy Pelosi landing Taiwan. At the same time, though, Zoltan Pozsar from Credit Suisse has released another big deal kind of note, saying that the Fed could push to 5 or 6% and that markets aren't really looking at the right thing. Take a look at this chart for those of you watching on TV. For those of you listening on radio, I'll walk you through it. It just shows the annual inflation rate, which has climbed, as you know, to 9.1%, as well as the Fed fund futures, just showing that the market expects about 4%, a rate of about 4%. And right now, of course, we're at 2.5 for the top value. But if we push to 5 or 6, that could be very damaging to the economy. Pozsar says doesn't matter, that the Fed would rather push us into a depression than risk losing the fight on inflation. Joining us now is Bloomberg Markets reporter Justina Lee. So Justina, this is pretty serious.
Yeah, I mean, Pozsar really is hitting back hard at the market narrative out there. You know, we have seen bond yields coming down again with kind of people starting to talk about peak inflation again and maybe the Fed dialing back, you know, those tightening moves coming up and maybe even cutting rates next year. But at the kind of the core of Pozsar's argument is that inflation this time around is structural. And so, you know, we have to worry about the effects of, you know, slowing globalization or kind of less, you know, geographic mobility for workers. And because of that, the Fed is going to have growth slow for an extended period of time in order to really bring down those inflation expectations.
And of course, all of this happening at a time where we're dealing with another, I mean, it's not new, but it seems to be new today, a level of risk aversion in markets surrounding geopolitics in Taiwan.
Right, exactly. I mean, today really is, you know, a textbook case of risk aversion. And one effect of that is treasuries are rallying further. And so there seems to be like multiple support for this, you know, rebound in government bonds right now. And I think, you know, those tensions are also reminding people that if we do see kind of, you know, the potential of a conflict, I mean, that could have economic consequences as well if, you know, there are further disruptions to the supply chain as we've already seen in the Ukraine war.
Justina, thank you very much. Bloomberg's Justina Lee with the latest on the markets. And for more market analysis, check out MLIV Go on your Bloomberg terminal. This is Bloomberg.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
Federal Reserve, of course, raising interest rates by 75 basis points again.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
So let's go inside the boardroom. Let's suppose you win a proxy fight or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
Keeping you up to date with news from around the world, here's the first word. In China, top leaders have said that this year's economic growth target of around 5.5% should serve as guidance and not a hard target. Bloomberg's learned that government officials were told there won't be penalties for failing to reach the mark. Economists have warned that China's growth will come in at 4% or lower. And the U.S. is sending Ukraine another arms package valued at $550 million. It includes more ammunition for an advanced rocket system that was sent earlier, as well as 75,000 artillery shells. The Pentagon says the U.S. has sent roughly $8.8 billion in military aid to Ukraine since the start of the Biden administration. Coming up, we will keep a focus on geopolitics, how it influences a market that is thinking actively about earnings and recession risk as well. Maria Weitmana, State Street Global Markets Senior Multi-Asset Strategist, will be joining us next. This is Bloomberg.
Is the chance of humankind to really understand itself. How much of that is true? How confident? Did you actually overachieve? Did you, back then realize that we would be using AI in many different jobs? Was it slower or faster than you thought at the time?
I think if I had a 35 or 40 year prediction task, I would have been more or less on track as to where we are today. but I would have predicted steady linear increase over time. But instead, the field had very minimal improvements until the last 5 or 10 years. Then it really took off. I think we ended up in the right place, but I was very wrong about the trajectory. To this date, we still know very little about how the brain works, but these machines are getting ever more powerful. And I feel in some sense, we did end up learning what human intelligence is by learning what it is not. If we exclude all the things machines can do better than us as what makes us unique in our human intelligence, then now we can rule out many, many things, because AI or machine learning has become so good at so many things that what's left must be the key aspects of human intelligence.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, today on Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Tensions over Taiwan. House Speaker Nancy Pelosi is expected to visit today. China threatens a military response. The trip will make Pelosi the highest-ranking American politician to visit Taiwan in 25 years. The markets react. Global stocks retreat while investors seek havens like treasuries and the Japanese yen. And another big quarter for another energy giant. This time it's BP, which raises its dividend and accelerates share buybacks. The company posted its highest net income since 2008. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. And Matt, there are other stories, corporate stories going on today, but really the focus for every asset class seems to be around the geopolitics and around that impending visit.
Yeah, and I mean, as it should be, right? Considering the fact that we're sending the U.S. Speaker of the House into Taiwan with a military escort, and we've got a strike group in theater ready to take action. I feel like the gravity of the situation hasn't quite hit markets. We're only down 0.2% on S&P futures, and considering we were up almost 10% last month, and we had a fantastic last week of June as well, we've come a long way, baby. So we're at 4,100 basically on the S&P, and if we have problems, you could expect us to fall a lot further. Some investors are getting into 10-year yield as a safe haven, but not too many. We're only down 2 basis points right now to 255. We were just down at 240 at the beginning of yesterday's session, and right now the U.S. dollar index is climbing, but only a smidge here. That's the technical term. 1264.89 is the level on the BBDXY. Bitcoin is down as it's correlated with risk assets, but it too is only down from a relatively high level to 22,741. So not really testing its limits at all, Kaylee. It looks like things are holding up pretty well.
Yeah, well, one group of stocks at least not holding up very well this morning, Matt, is those Chinese ADRs, Chinese companies listed here in the U.S. Those really reflecting what we saw in Asia overnight, which is a real dampening of risk appetite in that region as we look at the tensions between the U.S. and China. So stocks like Alibaba and Baidu, each under pressure in early hours, each down in the ballpark of 2.8% or so. You're also seeing a lot of the tech space under pressure. That includes some of those chip stocks like NVIDIA, which is down 1.5%, and then other just large cap technology stocks as well, including Tesla, which has its own China sensitivity story, of course, Anna. It is down about 1.5% in early hours.
Yeah, lots of China in the U.S. markets, it would seem, to keep an eye on. Kaylee, let's have a look at where we are on the European assets this morning. And the Stocks Europe 600 down by 0.6%. That angst around geopolitics, very clear to see across European equity markets. But are we in something of a holding pattern, waiting for the next leg of this story to develop? And that is the arrival of the House Speaker and indeed any Chinese response. Brent crude then down by 0.7% this morning. And I put this in the board because we've just gone below that $100 a barrel mark over the last 24 hours or so. 99.28 is where we trade. The BP share price not responding to that, responding to the numbers that BP reported this morning. So putting out these numbers, the highest profit in some 14 years. We got a big profit from the business. We got a big dividend increase and a big share buyback increase. So the latest in a theme coming through from these big energy companies. And Mullermex, the huge container shipping giants, will speak to the management of this company in programming tomorrow. But they pre-announced some of their numbers. They had to upgrade guidance to the market, and the stock is up by 1.6% then, Matt.
All right, very interesting moves then, corporate news as well. Luke Ellis, the CEO of asset manager Man Group, says he is cautious about the second half. He spoke on Bloomberg earlier.
I made what sounds a cautious comment about what's going on in markets, because I think markets are, clearly markets have been very volatile in the first half. Clients don't know what's going to happen in the second half, and institutional clients are trying to work out what to do. Inflow side of the equation looks very strong through the second half of the year, but what are clients going to do about their overall portfolio? I think anybody who would say they know is guessing.
Meanwhile, Credit Suisse strategist Zoltan Pozsar is warning the U.S. economy may need to undergo a deeper and longer recession than investors currently anticipate. In fact, he says the risks are such that Powell will try his very best to curb inflation, even at the cost of a depression and not getting reappointed. Maria Feitman, a senior multi-asset strategist at State Street Global Markets, joins us now. Maria, what do you think about the Pozsar note and the idea that, the market has it wrong? The Fed's not going to go just to 3.5 or 4 and then turn around. They could go to 5 or 6.
Yeah, Matt, that's exactly what I think. I think market is a little bit too optimistic about us seeing slowdown in data that will be some sort of shallow recession, and that would be enough to arrest inflationary pressures. I think that's possible, but very, very optimistic.
That's possible but optimistic. To tie those thoughts, Maria, good morning, it's Anna in London. Tie those thoughts into what we're seeing today for us, Maria. Risk aversion across global assets. We see the yen moving to a 2-month high. Where would you expect to see developments in these markets, given the geopolitical tensions that we're now having to factor in, as well as concerns about inflation and growth?
No, absolutely. Inflation and growth are key concerns. And maybe I kind of elaborate a little bit on the too optimistic view on the market is, we see inflation pressure still being strong. So we track online prices, they're still strong. They're not really showing many signs of slowdown outside kind of falling fuel prices, which is oil price driven. Majority of sectors still seeing quite a lot of inflationary pressure. And on the growth side, yes, there are some parts of the particular U.S. economy that are already in recession. We have negative GDP, technical recession, but there are other parts of the economy that are still fairly strong. So we've seen labor market being strong, industrial activity is still not weak enough. Corporate earnings, again, they're kind of stories of have and have not. So companies selling to more affluent consumer, larger businesses are doing better than the ones selling to mass market. So it is not kind of black and white. So economy is slowing, but not slow enough. So we're not yet in recession. Inflationary pressures are still there. So it's still, as I said, it's too optimistic to expect slowdown in the economy already being there and prices not going higher. So we expect more tightening of financial condition, as that's not great for risk.
Not great for risk. Another thing that might not be great for risk, Maria, might be further decoupling. We don't want to get ahead of ourselves, but clearly relationships between the United States and China not strong and not improving. Further decoupling of the global economy, I suppose, on a very medium-term horizon, would that be inflationary?
Possibly, because we've already seen kind of last year kind of breakdown of supply chains that hasn't helped anyone. And if there are some sort of retaliation, particularly economic retaliation, that kind of some tariffs, some kind of stopping of certain shipments can potentially be on the cards. We already heard that some of the Taiwanese food exports have been blocked by China today. So that sort of action would give kind of policymakers kind of additional headache, absolutely.
Well, Maria, obviously tension between the U.S. and China is weighing on risk sentiment broadly today, but we've already kind of seen this big recovery in stocks. So I'm wondering if what we're seeing now is just a fading of the rally that is going to resume, or if you ultimately think that really was just a bear market bounce and it's back to just the bear market part of that story now.
Yes, that's kind of our general thinking. So we would fade, in general, we would be fading July rally as kind of we're thinking that kind of decline, like fall in rate hiking expectations was premature. So we would be fading rally even without geopolitical tension. That's definitely true.
And just thinking regionally, we've talked about China. We, of course, have Europe facing the gas risk and perhaps an inevitable recession. We talk so much about whether or not there is an alternative to equities, but is there an alternative to the U.S. right now?
I mean, I have to say, we liked U.S. equities for a long time for the kind of better quality of companies, better ability to generate profits, more dynamic markets. It hasn't been, I mean, U.S. has underperformed rest of the world this year, but we think that where investors should be hiding if kind of slowdown is coming is in a better quality companies, larger caps. And U.S. has lots of those. So we still like U.S. relative to the rest of the world.
U.S. Value?
Not entirely sure about value. I mean, the largest component of value is financials. You probably know that we are not big fans of financials. We still think that flat yield curve, inverting yield curve makes it very, very difficult for banks to make money. We're worried about quality of the loan books as they kind of continue to provision. So value X financials, yes, but overall value is challenging.
Maria, thanks so much. Thanks for joining us. Maria Weightman is joining us there from State Street. Coming up on the program, we'll get back to the geopolitical tensions in Taiwan. Elizabeth Broad joins us, Senior Fellow at the American Enterprise Institute. What kind of Chinese response would she expect to see? This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, U.S. House Speaker Nancy Pelosi is expected to land in Taiwan later today, defying Chinese threats of military action. The trip will make Pelosi the highest-ranking American politician to visit there in 25 years. And China regards Taiwan, of course, as part of its territory and has vowed an unspecified military response to a Pelosi visit. Elizabeth Braw, resident fellow at the American Enterprise Institute, joins us now for more. So, Elizabeth, obviously China has made threats here. We heard Xi Jinping last week warning President Biden about playing with fire and getting burned. But Xi Jinping and really China as a whole is dealing with a number of domestic issues. The COVID-0 policy, the turmoil in the property sector. There's, of course, the Party Congress coming up this fall. To what extent do you think those things may temper any kind of retaliatory or provocative action from China?
Well, Kayleigh, a visit like this was always going to cause a lot of bellicosity from Beijing, simply because, as we all know, China, the People's Republic of China, does not recognize Taiwan as an independent state. So if a foreign politician goes there on an official visit, they will react very angrily. But it's also in nobody's interest to stoke a World War III, which has been the concern all this week and the preceding week that this will cause a war, because the Chinese will react so massively to this visit that is supposed to start tonight, local time. So, as you say, Kayleigh, there are a number of other issues that the Chinese government has to deal with, including the COVID response and disrupted supply chains. And so it's not really in their interest to make this to make this into a global conflict, as they would by responding militarily. That said, they have responded very provocatively by flying very close to Taiwanese airspace.
Well, and aren't the Americans being pretty provocative? I mean, why fly in with a military escort and a strike group in theater? I guess you could say for her defense, but clearly against the Chinese army, it doesn't matter if we have a pack of F-35s around her. They're not going to win any kind of conflict, so it would just start a war.
Well, in the U.S., so the first step was that Pelosi announced this visit, and the moment she announced it, the U.S. government had including the armed forces, had responsibility to look after her. They wouldn't be able to say, well, you go on your own, we're not going to have anything to do with this. So it puts the Biden administration and military commanders in a very difficult position. The Biden administration can't exactly tell her not to go. It's her prerogative. She doesn't work for the government. So that is really the unfortunate setup. If I were her advisor, I would have said, just go to Singapore, then make an unannounced visit to Taiwan. But clearly, she had other advice. But the point is that the U.S. military has an obligation to protect office holders going to foreign countries, even if that paradoxically might stoke a military response from the other side. And Matt, that is a really perilous moment we are in at the moment.
Yeah, I think it's fascinating here. What happens if China, I mean, they have to respond somehow, right? And we hope that it's not a military conflict. What are the other options for the Chinese response?
Well, we have already seen today, the day isn't over, but we have already seen Chinese aircraft flying just to the dividing line with Taiwan. And we have also seen Chinese military vessels going all the way to the unofficial territorial water dividing line between China and Taiwan. So just not sailing into Taiwanese waters, but staying there at the border, the unofficial border between maritime border between the two countries. So I think we'll see more of that. We could also, for example, see Chinese drones flying into Taiwanese airspace. How would Taiwan respond to that? It's not a full-blown military attack, but it's also not nothing. And I think, Matt, because Nancy Pelosi represents California, represents San Francisco, I think we could see some very ugly retaliation against Californian IT companies, tech companies. That is Nancy Pelosi's constituency. They won't like it if China retaliates against them.
That's really interesting. So we'll look to see if we get anything like that then, Elizabeth, on the economic side. In terms of the time horizon, over what horizon do you think we would expect to see the Chinese retaliate here? I wonder, this seems to be something that those in the markets are trying to wrestle with.
Yes, and I think we would be foolish to think that if she arrives in Taiwan, then leaves without a World War having broken out, that we are fine. The Chinese government has showed over the past few months and indeed years that it takes a long view on things. So, for example, when Sweden announced that it wasn't going to include Huawei in 5G, nothing very much happened. Then a few months later, it emerges that Ericsson of Sweden has had a massive loss in their sales in China, whereas sales everywhere else in the world went up. So clearly China was retaliating against Ericsson very quietly over several months. And so I think we could see responses like that against companies based in California and indeed other responses as well. But the commercial side is where I would look very closely.
All right, so the commercial side, that's interesting. In other developments overnight, Elizabeth, we've heard President Biden confirm that a U.S. strike in Afghanistan over the weekend killed the current leader of al-Qaeda, or who was the leader of al-Qaeda, Ayman al-Zawahiri. The Americans, of course, call him a longtime terrorist commander who helped plan the 9/11 attacks. He took responsibility for the London bombings in 2005, which killed 52. Are there further developments to watch on that front, Elizabeth?
Yeah, so if we think back to the 90s when there really weren't any threats to America at all, this is a reminder. The killing of Zawahiri is a reminder of how dangerous the world has become. He was, of course, one of the masterminds of the 9/11 attacks, but today he and al-Qaeda are just one of many major threats against the U.S. And the reason that he was killed, that the Americans killed him with this drone strike, is that al-Qaeda remains a major threat to the U.S. and indeed to the wider world. So it wasn't a matter of the U.S. being able to say, well, we killed Osama bin Laden a few years ago. Al-Qaeda doesn't pose a threat anymore. It does pose a threat, and Afghanistan clearly was providing refuge to him and to other Al-Qaeda leaders, because he was living there very openly, and so openly, in fact, that the U.S. could find him. So it is a reminder of how perilous and how dangerous the world has become. So it's Al-Qaeda, it's Russia, it's China, and let's see about Iran and North Korea.
Okay, Elizabeth, thanks very much. Lots to discuss, sadly. Elizabeth Braw of the American Enterprise Institute. Coming up next hour, Julie Norman, University College London Centre for US Politics. She will be joining the team. That's at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can
spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines in New York. Also with us, Tom Keene, co-anchor of Bloomberg Surveillance. And he joins us now with a single best chart. And I'm sure you're reflecting on the theme that seems to be hanging over almost all assets this morning then, Tom. Good morning.
Really quite historic. Goes back to my youth and all the tensions that you had with the China of long ago. This is a spectacular chart. Let's sit on it for a while. This shows the rate of change, the growth of per capita Taiwan in U.S. dollars and per capita China in U.S. dollars. The huge ascent of China since the visit of Newt Gingrich in 1997, and how China has narrowed the gap towards a prosperous Taiwan. Taiwan makes up a shocking 1.7% of the population of China, and they've been the machine that worked for decades.
Tom, I'm sure you've got some great guests lined up because this is real tension. There could be serious consequences here, so we need to prepare.
There are global consequences as well, but I think we've done a lot over the last number of months, thinking of James Stavridis, of course, with all his work in the South China Sea, and Robert D. Kaplan, who's done so much as well. We'll take an equity bent today, but we will look with Julie Norman of UCL, not only at what's going on in Taiwan, but also the death of a member of Al-Qaeda.
All right, well, we will look forward to those conversations. Tom Keene on Bloomberg Surveillance, thank you so much. Now, as for what else we are watching today, I will be watching the Fed speak because there is a lot of it. And basically what I'm looking for is, do they push back on a market that now expects them to be less aggressive and possibly even cutting by the time we get to next year? First, we'll hear from Charlie Evans of the Chicago Fed. That's at 10 a.m. Eastern. Then Loretta Mester of the Cleveland Fed at 1 p.m. Eastern. And Jim Bullard of St. Louis will round things out at 6:45 p.m. Eastern time. But really interesting to see their language, considering the hike we saw last week of 75 basis points and the press conference after was perceived as dovish by the market. How dovish or hawkish do they sound today, Matt?
Yeah, and it'll be interesting to see if they address Posar's notes, because a lot of times the Credit Suisse strategist sounds shocking, but to throw in the word depression really raises the bar. I'll be watching Nancy Pelosi in Taiwan, obviously, when she lands there. It should be 10:20 Wall Street time, 3:20 London time, to see what the response is when she flies in with a military escort, because we haven't sent a speaker there in, I think, 25 years, and I'm not sure if the last speaker brought fighter jets.
Right, and we'll be looking for what China's response looks like. Our colleagues doing a good job of keeping us across all of the possibilities. Could we see bigger warplane incursions, flying warplanes over Taiwan, diplomatic, economic retaliation? All of that very much in focus for programming in the hours ahead. This is Bloomberg.
need to think differently about, being enough. I think, in a number of different respects, I think, we're trying to either prove ourselves or do too much. I think we have to realize that, as Black people, despite what society says about us, despite, what happens, we are enough. And so I think going forward in that headspace, I think is really important.
I think the pandemic really highlighted the importance of financial literacy. And in that, it's so important to understand, okay, like how do we budget? How do we plan for, unforeseen circumstances and really make sure that we're prepared for these events in the future. And through Blackstone Capital, that's why we really place a big emphasis on financial literacy in all forms, budgeting, retirement, investing, etc.
What motivates you guys to do this?
I think it's honestly the impact that we've already seen. It's something that we just want to keep going because we've seen students come in, learn everything that we teach them, and get really successful jobs on Wall Street, really change their trajectory, their career path. And so if we can keep doing that for the next 100 years, that's something that's satisfying for me.
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto. Today on Bloomberg.
The reality is the economy is weakening. It's probably going to weaken further.
We're still in this race between a peak in inflation and what will probably be a mild recession.
The Federal Reserve is unlikely to be kind to the equity market.
If we see weakness in the labor market, how will the Fed's communication evolve?
The market is basically pricing in a Fed put.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Futures down 0.75% on the S&P. TK, the main event is in Taiwan.
It is. We switched to international relations. It's really being dominant. We'll get to the markets. Great that Liz Ann Saunders with us on the equity markets. And Mike, am I right, John? Mike Wilson's with us later?
Mike Wilson in a few hours' time.
But right now, it is about Speaker Pelosi and the history to be made in Taiwan. The reach here, John, from 1997 to where we are now, absolutely stunning.
The White House keen to point out, Tom, that Congress is an independent branch of government. I'm not sure that the Chinese quite see it that way this morning.
I would say not. There's many ways to cut this and a lot of reading to be had about what's different and the tensions in that. But what it does come down to, John, is the ability to make a mistake. When I talk to military experts, whether it's General Kimmett, General Hodges, as we do with Admiral Stavridis, they're always talking about you get yourself set up where you can make an itty-bitty mistake. It's sort of like Bloomberg surveillance in that regard.
We make a ton of mistakes, Tom,
we do.
On a daily basis. Let's hope, Lisa, that the Chinese government does not make a mistake when they are set to respond to a visit that we all anticipate is going to happen in the next couple of hours.
Yeah, and everyone's trying to figure out what the response could potentially be. And in the market, there seems to be a feeling this is risk off. This is having a pretty significant market ramification, at least when you look at the 10-year yields going into about 2.5% and people projecting it could fall further. How much, though, are people perhaps looking past some of the longer-term implications of the fissure between China and the U.S.? This is structurally inflationary, and a lot of people are looking at how the Fed responds to that.
So, Lisa, we've got that headline risk hovering over this market, weighing on sentiment through much of today. You've also got the data and the Fed speak, which, let's face it, that's what we've been trading on over the last week, ever since Chairman Powell spoke last Wednesday.
How do they deal with this new potential risk? Usually risk off, or this idea that there could be some geopolitical tensions, would lead to an easing in Fed policy. This time, how much does it exacerbate inflationary tensions, exacerbate some of the inputs that are causing some of the constraints in supplies, at the same time that the data isn't rolling over quickly enough to justify the dovish pivot that many people are pricing in?
We got some risk aversion right now. Here's your price action. We're down 0.75% on the S&P. On the Nasdaq 100, we're down 1 full percentage point. As Lisa pointed out, yields in again. We're down 3 basis points on a 10-year to 254.45. Bear in mind that in the middle of June, we were close to 350. That is a monster turnaround on a 10-year. Tom, in foreign exchange, euro dollar 102.36. We're negative 0.25% there. Dollar yen getting back to 130, Tom. That's 5 days of yen strength.
Let's talk about Jordan Rochester at Nomura with a real change here. And this is some of the nuances going on now as people not recalibrate, but maybe, John, reset off of all the caution that's out there. He has euro dollar, still does, and he's looking for weaker euro. But he says now, because of the U.S. upset, switch over to euro yen, looking for stronger yen, weaker euro.
We target 125 on euro yen. At least the story clear there. If you want to sell the euro, Nomura is saying do it against the Japanese yen.
It is fascinating how quickly things are changing as people take a look at where the strength is. And John, you were saying we do get data today, and I am actually really trained on this. At 10 a.m., we get U.S. June JOLTS data, the job openings data. We saw it peak out a couple of months ago. It is still well above 11 million job openings out there, which exceeds the number of potential available workers. How much does that come down? What does that mean about how tight this labor market is, and how does that factor into a Fed that has seemingly backed away, but have they really? I mean, we can get into the whole thing about what Fed Chair Jay Powell actually said and how the market interpreted it, but the market cannot interpret a strong labor market as anything other than giving the Fed all the impetus to really move ahead with a strengthening and tightening policy. Today, House Speaker Nancy Pelosi is expected to arrive in Taiwan. The expectation is around 10:30 a.m. Eastern Time. What is the Chinese response? She is the first House Speaker to visit this territory in 25 years. How much does this really ignite an immediate response from China versus a longer-term breach in the relationship between China and the U.S.? And today, there's loads of Fed speak. Chicago Fed President Charlie Evans, Cleveland Fed President Loretta Mester, as well as St. Louis Fed President Jim Bullard. How much they talk about the easing in financial conditions and push back against that, John, at a time when you're getting back to zero real yields on the 10-year. Remember, that real yield getting positive was what spurred the sell-off, some people say, in risk assets, and we've gone full circle here.
There's a lot to talk about in this bond market, and we'll do that through the program. Lisa, thank you. Looking ahead to that data and all the Fed speak as well. Looking ahead, potentially in the next couple of hours, to Speaker Pelosi landing in Taiwan, the highest-ranking U.S. official to land there in some 25 years. Tom, I believe it was 1997 and Newt Gingrich. That's how far back you've got to go.
And it's really interesting here to see the domestic politics, and of course what we saw in 1994 with the revolution that some would say Gingrich of Georgia led. But John, it was a Republican moment then, and here is the arch Democrat of Baltimore and San Francisco affecting a policy with what I would suggest is hugely quiet, vigorous Republican support.
We understand,
fascinating tensions.
That the U.S. leader told Xi on a call during that exchange last week that, quote, Congress is an independent branch of government and the Speaker makes her own decisions. This is what we heard from the spokeswoman for the Chinese Foreign Ministry earlier today, when the House Speaker, being the third highest ranking figure in the U.S. government, flies on a U.S. military plane to make a provocative visit to the Taiwan region. It is certainly not unofficial behavior. We're going to guide you through the headlines as they come in through the next couple of hours. We're going to guide you through this market too. We'll do that with Thanos Vanvakidis, Global Head of G10 FX Strategy at Bank of America. Thanos, I was going through your calls, and there it was, bearish on the Chinese currency. Thanos, walk me through as to why.
Well, the Chinese economy has been weak. Policies have been easing. This is the only country that has not learned how to live with COVID. And the stimulus in these conditions is not as effective, and part of the stimulus actually has to be a weaker currency. So adding everything together, I believe that there is further weakness in CNY. EMFX more broadly is under pressure. We have seen selling from positioning that is not short yet. So from this point of view, we also expect more weakness in the MFX more broadly.
Thanos, there are some highly speculative conversations taking place right now over Speaker Pelosi's potential visit to Taiwan and how China might respond to it. We've said on this program over the last week that you have to remain focused still on what's happening domestically in that economy. Thanos, can you tell us how bad are things right now in the Chinese economy?
Well, definitely growth numbers are way below what we have seen historically. And even when the rest of the world was recovering, opening up after the pandemic, the Chinese economy was weakening. There are also problems in the real estate sector, where investment has been a key engine of growth in the past. And also trade tensions with the West for an economy like China that has been very much export dependent in the past adds to a relatively weak economic outlook. But to me, the most important is that until China finds a way out from COVID, it is hard to become positive on economic growth.
Thanos, taking a step back, there is a question of if there is an escalating issue between the U.S. and China, escalating tensions after this visit to Taiwan by Nancy Pelosi. How long can the dollar remain the haven currency if it is also the epicenter of this potential ratcheting up in tensions?
I mean, definitely if we see risk off because of this kind of geopolitical risk that we're seeing this week, the dollar theory should strengthen, but the market also believes that this could lead to a less hawkish, more dovish Fed. This is where I think the market is wrong. And even before the developments this week in China, the dollar has been weakening, yields have been falling, with the market expecting a dovish pivot by the Fed. I completely disagree with this. The Fed is focusing on inflation. Inflation is still rising. The labor market in the U.S. is still very strong. We need the U.S. economy to weaken for inflation to come down, and we need inflation to be well on its way down for the U.S. to start thinking, being less hawkish. Market pricing rate cuts by the Fed next year make absolutely no sense.
Thanos, I'm going to add your name to the long list of names I've got who completely disagree with what happened last week. Thanos, thank you. Thanos Vamakidis of Bank of America. In response to what's happened last week, we've got some dollar weakness, and what you're seeing is some yen strength. So you've got some risk aversion, Tom, accompanied with lower yields, not higher yields. That's a big change. So what do you see yen strength? We're back down to 130. 130 dollar yen, Tom. That's a major change from 5 days ago. A 5-day rally.
It's a 5-day rally, and it's a shift there, and on the screen there's some correlation. But I would look at the yield space, and John, to wake up this morning after the 3-hour sleep and noticing that the 10-year real yield almost went to zero and negative. It got to a 0.02. Right now, 4 basis points make it 5 basis points off the zero mark. That really indicates the shift back to the unimaginable negative real yields.
There's a lot of little things going on in the bond market right now.
Yes, that's precisely right.
Lisa, I know you're looking at the yield curve 2s, 10s. You can take a look at the 3-month versus the 10-year. What is it now? 4 or 5 basis points?
Yeah.
Positive, just about?
It's just about positive. The trajectory of how quickly it has collapsed is just dramatic. It is historic in how quickly it's collapsed. The reason why this yield curve is interesting is because it's the one that the Fed has pointed to say, don't look at the 2-10 spread. Yeah, sure, it's inverted. Yeah, sure, it's the most inverted since 2000. But we're really looking at the 3-month 10-year. Well, that's collapsed too, so they can't ignore that anymore. But those inflation pressures, Tom, still there.
Yeah, the velocities there, John. I mean, I just did what's called a fitted standard deviation study. This is a fancy mumbo jumbo on the Bloomberg, John, and we've gone from plus 3.6 standard deviations on June 13th to a negative 2 point whatever. It's a 5.8 standard deviation swing in the 10-year yield. That shows the velocity right now.
It's too early for that kind of stuff, Tom.
It's never too early.
It's just too early for
it's
it.
never.
Come on.
Fitted log studies are always something you can do.
And John Kirby's trying to keep everyone calm. The National Security Council spokesperson said this in a news conference yesterday. Put simply, there is no reason for Beijing to turn a potential visit consistent with long-standing U.S. policy into some sort of crisis.
Let's talk about that.
Conflict. Let's have that conversation up next and later in the next hour. Mandy Zhu of Credit Suisse on this equity market rip-roaring rally of the last few weeks. This morning, slightly negative, down 0.8%. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. U.S. House Speaker Nancy Pelosi is expected to land in Taiwan in a few hours, defying Chinese threats of military action. The trip will make Pelosi the highest-ranking American politician to visit there in 25 years. China regards Taiwan as part of its territory. It has vowed an unspecified military response to a Pelosi visit. President Biden says a U.S. drone strike in Afghanistan has killed one of the planners of the 9/11 attacks. Ayman al-Zawahiri was the leader of al-Qaeda. According to a senior administration official, the drone attack had been planned for weeks. Zawahiri was in a house in Kabul and was said to have been killed when he stood out on a balcony. The U.S. is sending Ukraine another arms package valued at $550 million. It includes more ammunition for an advanced rocket system that was sent earlier, as well as 75,000 artillery shells. The Pentagon says the U.S. has sent roughly $8.8 billion in military aid to Ukraine since the start of the Biden administration. And in the UK, Liz Truss vows to cut waste, bureaucracy and inefficiency in the civil service if she becomes Prime Minister. Truss is the front runner in the race with Rishi Sunak to succeed Boris Johnson. She says she can save taxpayers billions of pounds a year by altering pay scales and slashing holiday allowances. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. Less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long and a persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. MasterCard is building on its core business, branching out into new products and services. It's up to CFO Sachin Mehrad to ensure this growth strategy pays off.
The key to being successful in this kind of environment is to have a diversified portfolio.
Chief Future Officer, Wednesday on Bloomberg. Brought to you by Workday. markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close, weekdays on Bloomberg. Season is here.
Everything I've read has just got the R word. Resilience, not recession.
Earnings are expected to be so weak that I think that presents a very intriguing opportunity.
Bloomberg breaks the numbers first.
We get a deluge of earnings globally this week from Alphabet and Microsoft.
With exclusive expert analysis.
These earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
There's no reason for the Chinese to use a potential visit by the Speaker of House as some sort of pretext to escalate tensions higher than they already are. And I would remind you that in recent days and weeks, it is the Chinese side that has, through their rhetoric and their activities, including this live fire exercise, the ones that are escalating the tensions.
Good to hear from John Kirby yesterday, the National Security Council spokesperson from New York City this morning. Good morning with Tom Keene and Lisa Bramberts. I'm Jonathan Ferro. Here's the risk-off tone dominating this market right now. It looks a little something like this. Futures down 8 or 9 tenths of 1% on the S&P. On the Nasdaq down by more than 1 full percentage points. Treasuries rallying, yields lower by 3 or 4 basis points to 250, 356. This is just such a massive turnaround from where we were in the middle of June, where we were pushing 350 on a 10-year, much lower since then. Crude lower too, Tom, by a little more than 1%, 92.70 on WTI.
And that swing for global Wall Street, almost 6 standard deviations on the 10-year yield. That's a fitted study there. It's a fancy thing you can do. But you're right, John. I think the CFA phrase, John, is ginormous.
Ginormous.
Ginormous
Huge.
moves.
Monster move, TK.
Market as well. We'll talk about the Apple transaction yesterday. That was ginormous as well. Always ginormous on what's going on inside the Beltway. Joseph Matthew joins us now in Washington with his Muscless and Sound on Bloomberg Radio Worldwide. Joe Matthew, David Sachs in Foreign Affairs magazine does a phenomenal summary as we stagger with China and Taiwan over 30 years. And he doesn't mince words. He says there has been a rhetorical shift in Washington, starting with President Trump. You know, it's not a certitude, but he puts it with Pompeo and Trump. Is Biden and Speaker Pelosi simply following on from the work that Trump and Pompeo laid?
Well, they probably don't like that wording, but it is essentially the reality, right? That goes for tariffs as well. This is largely the same relationship here. And boy, what deliberate language coming from the White House yesterday. A lot different than what we heard from Joe Biden 2 weeks ago. That column opens with those remarks when the president said the military doesn't think it's a good idea right now. If he hadn't said that, this would be a very different conversation, it strikes me at the moment. Everyone's looking back to 1997 and Newt Gingrich. That's been 25 years, right, since a Speaker of the House touched down in Taiwan. But Beijing isn't looking at 97, Tom. They're looking at 91, which is when the Chinese police, Beijing police, chased Nancy Pelosi and some other lawmakers out of Tiananmen Square when she unfurled a pro-democracy banner. There are questions about whether she will make a statement like that or if this is going to be, you know, something where we see photographs hours after her visit, but that has yet to be determined.
Completely unfair, but Joe, it's Unfair Tuesday, so let's go with it. President Xi has said he's looking for a great rejuvenation by 2049. This is something that Elizabeth Economy has really honed at the Council on Foreign Relations. Do we have a plan out to 2049?
With regard to China, I don't know if that's true. To be honest with you, we don't even know what we're going to do with the tariffs in China next week, and we've been waiting for word on that. This is such a fast evolving relationship here that I'm not sure the White House would have a direct answer on that. Look, there's a lot of planning that goes behind any geopolitical matter, certainly the second largest economy in the world. But to visualize where we're going to be then, Tom, I'm not sure that there's an answer at 1600.
Joe, I want to pick up on something that you said. In late July, Joe Biden said that the military thinks it's not a good idea for Nancy Pelosi to go to Taiwan, and that really is the reason why we're all talking about this. How much is it Joe Biden's reluctance to sign off on this publicly, and how much is it a rhetoric change from China, a hardening in the stance, the buildup in Air Force and the potential air raids that they've been conducting in the region? How much has that been the change?
Well, it's hard to tell because, we had the live fire drills 2 nights ago, and it's a question about what exactly China is going to do. Was this about the preamble, or will there actually be a concerted response? If they succeeded in scaring Nancy Pelosi from going to Taiwan or somehow convinced the White House to talk her out of it, this would be a very different story this morning. It seems clear that she has really no opportunity but to go through with the trip. So, is this the confrontation now, or will there be something even days later? John Kirby, when we spoke with him yesterday, talked about the possibility of a missile test. Maybe they drop a few missiles in the ocean. Maybe there's a large-scale incursion upon Taiwan's airspace, or at least, getting closer to flying over the island. All of those would be very bold moves if we saw that in the next couple of days, and it's something that the Pentagon is prepared for. We have to remember, Joe Biden says, hey, we can't tell Nancy Pelosi what to do. We're going to be figuring this out just like everybody else. But it takes the administration to get her there. She's flying an Air Force plane and will have likely escorts from the Pentagon. General Milley, the chair of the Joint Chiefs, said they will get her in and out safely no matter what.
Joe, this particular president has made a real big point in trying to coalesce his allies around some sort of center to reunify NATO, et cetera. How much support does the United States have from its allies in this move of Nancy Pelosi that perhaps hasn't been endorsed, but certainly is being supported by the nation?
Well, and of course, the region is a greater question here. If we're on the cusp of creating a NATO for Southeast Asia, this is what's going to prompt it. I asked Mark Esper yesterday, the former defense secretary, if this would be tantamount to an Article 5 violation for NATO if China, in fact, did go into Taiwan. And it's not at that level yet, but Lisa, it's getting close.
Joe Matthew, down at DC. Joe, we'll catch up for the next hour on an important event set to take place in the next couple of hours. Tom, I think the White House has been pretty consistent about this. When it comes to Taiwan independence, they'll say we don't support it, but they do not say they oppose it. And when it comes to Speaker Pelosi's trip, they're not coming out and saying we support it, but they're also not coming out and say we oppose it. I think there's a pretty consistent stance on a range of issues from this White House on this particular topic.
It shifted a couple years ago, John. This was stuff that was unspoken for years and years and years, and it shifted certainly with the catalyst of President Trump and Secretary of State Pompeo, and it's carried forward here in its own unique Biden manner. So here we are, and what we've got is one aircraft carrier hung off Taiwan somewhere, I believe, north of Luzon in the Philippines, the USS Ronald Reagan with its complement of ships.
I think it's a little bit too simplistic, Tom, just to blame the former administration for the shift. The hawkish rhetoric coming out of the Xi administration has been massive.
No, absolutely.
And that's the big change from spring, too.
Massive.
Let's not miss this. Back in spring, yes, we heard some complaints, but nothing like this. Tom, nothing like this.
Well, I would say in the last 4 or 5 years, and again, I mentioned Dr. Economy at CFR with their mustery, the third revolution. There is a third revolution in China, and that links in with the change in rhetoric that we saw from Mr. Trump.
There are problems at home. Elisa, we've talked about it. The weakness in the economy, the instability, the potential social unrest around the mortgage problems too.
And how much was this a planned move that was delayed by the pandemic? There certainly has been a buildup in troops. It's not just a change in rhetoric, but it's also a buildup in military activity by China in Taiwan and around there.
Down 0.8% on the S&P. From New York City, this is Bloomberg.